All right, looking good. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening live stream. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Everything looking good on my end. Good to get started, I believe. How you guys doing today in the chat? Let me just switch up one more thing here. All right, sweet. I think we are good to go. All right, so let's start off with the 10-year, and we'll kind of zip through all this stuff. Basically, we had been paying attention to our channel once again, just paying attention to what was going on here. We had a little poke out the top, came back in, found some support, but we did basically come back up, retest it, and then we got the breakdown. But as you know, the most important thing actually that we're paying attention to is our Fibonacci levels, which are much more important than the actual channel itself. While the channel has been reliable, we have quite a few much more important things taking place. So we're going to zoom out here and take a look at the big picture. This is the weekly 10-year treasury yield. And what I've done is back in, what is this, 1983 is when this starts up here where it peaked. And we've been in a very clear downtrend. Now we don't have, on the top here, we have a very straight resistance line here in red that's been, basically every time we come up to it and bump our heads on it, we've been getting rejected essentially at that level. And the fact that it goes back, what is that? What says 81 actually right here, 80, somewhere around there. So let's say 81. So, we basically have a 40-year pattern on our treasury yields downtrend. And then on the bottom here, we basically bottomed out in 86. And, this one is obviously a little arcing. It's not quite as beautiful as the top line is. But again, we have resistance, 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 blah, 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 blah. So it's very reliable along the way. So, we're paying attention to this big blue line at the bottom and the big red line at the top. And what we did was when we topped out right here during the 2018 pump on treasuries, since then, we obviously came down here and bottomed out essentially at zero with this big boy wick on the weekly. And now here we are essentially bouncing back up to the top of the channel. Now we're on the way back up to the channel. We don't have to get all the way back up to the channel. It's not a necessity. There were quite a few times where we went from the top to the bottom and then, interacted on a key Fibonacci line in between without touching the resistance or support. That's 100% a possibility. So now we have a very clear resistance, a very clear support on the treasury yields. And now inside of that much smaller pattern where we topped out back here in 2018 in October, we basically have our Fibonacci drawn from the top here to our bottom at zero, basically down here. And what we're paying attention to now is the percentage retracement of that. That is here in yellow. So now we have three key areas that we're paying attention to. And then one more time from the very top of the pattern back here to the very bottom of the pattern right here. In that 40-year period, we now have a Fibonacci drawn from the top here to the bottom here, which is showing up as our red horizontal lines as well. So now here we are essentially bouncing off of all these key different levels in the middle of this process. So you'll see here where we bottomed out and we got our reaction rally back up, and then we came back down, found support on the blue support, found resistance up here between the 382 in yellow and the 236 in red, came down here again, found support on the bottom, and then we had some very clear interactions along the way on the 236 in yellow, and then once again we got up to the 382 in yellow, and then we did something special. We broke out from that level and took out that previous high. And now here we are interacting up here, and along the way we had some very clear interactions with the yellow lines and the red lines as well. And now we got above the yellow 618 when we broke out of that channel. And then when we came back into the channel, we retested the yellow 618 again. But we're now getting rejected off of the red 382. So the most realistic, most likely situation here is once we got above this key level right here that was acting as support, that we basically chopped around, we chopped around inside of that area above the yellow right here and right here. So those are very clear supports when we came down to test them. So once we broke through them, we would expect them now to continue acting as key supports. So we expect this level, this 618, to act as a very, very powerful support, as essentially we did not go below that since June of 2012, and we were able to find support. And then once we broke down from it, we would expect, obviously, like we saw happen, a capitulation event because we lost the key support level. So now once we've regained that support level, which we have done, we would expect now that to act as support, and then our next highest level to act as resistance. So that's essentially what's happening now. We have that yellow level right here, which is our next target to the upside, the 2.08 level roughly, 2% interest rates. And you'll see very clearly, I'm going to put an extra line in here just to, right there. So, and I'll switch the color on that one. I'm just going to make that green right there. So you'll see very clearly that was support and resistance a bunch of times along the way. Every time we came to it, we saw very clear interactions with it where it acted as support and resistance. So, and you know what? I'm going to go ahead and do the same thing again for that previous level. So that previous level now here in blue, you can see how important that was. And then the green level, you can see how important that has been in the past. So now we would expect to come back up and touch that. That's going to be our 786 in yellow here. So essentially all we're trying to do now is just establish a base on this level above that blue line, at which point in time we would expect to move up to the green line. Now we may top out right there, or maybe we get the final move up, which is the yellow 886, the red 0.5, and our top of our long-term 40-year channel that we're operating inside of. So once again, that would be our next target to the upside, should we be able to get up to that level. And I think probably the likelihood of getting up to that level is extremely high because we've come this far, and that's essentially all three of our resistances lined up in the same spot. So in my opinion, we are very likely now to come up very, very soon and retest the 2.0 whatever level, and then eventually the 2.5 level, which just so happens to also be the danger zone should the 10-year treasury get up to that level. Now, if we look at our weekly trend here, you can see we're very clearly in an uptrend based on that blue TJD, TDMACD line. And then also we were obviously inside of the bullish control zone with the sell buy sell signal for some time. But now here we are basically just going sideways while the indicator oscillator resets, while we get multiple red histograms. So it is possible that we poke down below this, but more than likely, I think we're just forming a base while we reset our oscillators before we get that next leg up. So that is what I'm paying attention to right now. That is why these levels are so important. And, essentially we can get very clear interactions in the past, give us a very clear idea as to what we might be doing in the future. And I think these levels are very, very important. Obviously, no one else is paying attention to these levels, but us. So paying attention to these levels going to give us a huge advantage over the market, as everyone else is saying interest rates are going to go back to zero because the Fed can't service its debt. Interest rates are going to go to 100%. Like, people have no actual argument behind these things. They only just state what they think is going to happen, but no actual reason. So now that we've identified those three key levels, those three key areas, we have not only direct targets as to what we think is going to happen, but then we can align the fundamentals and the technicals with those targets. So, when people say the Fed can't let the debt go or the interest rates go above 2.5% because then they won't be able to service the debt. Well, we know why, because the chart is telling us why. The technicals are here lined up with why. And then also the fundamentals, such as the interest rate is too high on the total amount of debt that we have. Therefore, the Fed can't let it get above that level. Now, in the event that we do get up to the top of that level and consolidate for long enough and get a break, that's probably like a serious shift in financial policy. And there's something like ridiculous going on, in that environment. AKA, like, there's a complete monetary shift in like global policy, etc. So that's what we're paying attention to. That's why those levels are so important. That is why we've basically been chopping around in this area. But when you kind of zoom out and look at the big picture, it gives you a much more realistic and much more, I think, accurate picture of what's actually taking place here. So now if we pay a little more attention here on the monthly, and once again just kind of zoom out, you'll notice that the last time we were down in that zone was when we were down at support, which lined up not only with the bottom of the range, but also that key Fibonacci level. We then exited on the monthly, the bearish control zone, got the hard buy signal, got a bunch of green histograms in a row, crossed above the slope line here, flipped it over blue, and then from that point in time, you know, we moved up substantially, basically one entire fib level up, came back down, actually retested it, and then finally made it to the top of the channel. So I would expect a similar move like that to take place. We have now gotten a powerful move back to the upside. We could very easily come all the way back down to like 1, you know, in the event that we lost this support level. Maybe we come down to 1.16, maybe we come down to 1. But eventually, what I would expect to take place is that sideways consolidation followed by the completion of the move back to the top of the range. So, and you'll see here, we have that exact signature taking place. We got the hard buy signal. We've gotten a powerful move to the upside already, obviously from like 0 to, you know, 1.7, 1.8, whatever it was. And then obviously a bunch of green histograms in a row. We have now crossed over the slope line. And if we spend enough time going sideways or moving to the upside, we're going to flip this over blue and we're going to enter into a powerful uptrend on the monthly in bond yields. You know, and obviously these have a inverse correlation to bond prices. So, you know, this, as these go up, bond prices go down. As bond prices go up, treasury yields go down. And of course, this is the 10-year treasury yield. So, and then if we just kind of go back into our daily picture now and, you know, kind of take the microscope out and get a close idea as to what's taking place on our little slide right here, we can get a much more accurate picture. So while this little channel is important, the yellow Fibonacci is more important. And while the yellow Fibonacci is very important, the massive channel that we've been operating inside of is very important, as is our red Fibonacci, much more important. So that is what I'm paying attention to. That is what I'm expecting to happen. That is how we're able to identify essentially our bearish divergence that led to the absolute bottom right here when everyone was saying interest rates were going negative, and we were sitting here laughing because it's just a bunch of sheep repeating the same thing over and over, and no one actually knows why they're saying it. They just know they heard someone else that's smarter than them say it. So that's what the beauty of independent thought is that we're actually able to use technicals to identify things, and then other people just jump on our coattails and try to figure out how the hell we figured all this out. So that is what's going on here, and that is why it is so important to think outside the box and just not listen to what all these other sheep are saying. So all right, and DXY will be next. Let's take a look at what's going on with the dollar. So obviously, you know, we had a very clear pattern taking place. You know, we're started to bottom out here. We broke down from, I'm going to turn off the moving averages and I'm going to turn on our drawing tools. We broke down from that pattern. And then once again, you know, this was all taking place inside of basically a, you know, downtrend followed by a bullish consolidation. We were expecting another move back up to the top of the range, but instead we broke down here. And now once again, everyone's talking about how the dollar is going to zero, how they're going to replace it with the Fed coin. And that explains why it's so low, how asset prices are going to go through the roof, and, you know, dollars are going to be worthless. Make sure you get out of all your dollars. But I'm sure that has nothing to do with the narrative that in order to continue to prop up the economy, they need to not only get people to spend these dollars, but spend them into the economy fast enough to keep the bubble inflated. So what they're trying to do right now is, you know, keep the bubble inflated, or the balloon inflated. And in order to do so, we have to push every last breath out of our lungs, every last bit of oxygen and CO2 out of our lungs, to attempt as the American people to essentially bail out the economy that is failing all around us. Not just the United States, but the world in general. So as we blow out every little bit of air is like the equivalence essentially of us spending every last dollar that we have to our name, with the expectation or with the factual knowledge that in the future everything will cost more. Therefore, you better buy as much as you can now, because if you go to buy it later, you're not going to be able to afford it, or it's going to be 20% more expensive, or 50%, or 100%, or you'll never be able to afford anything but bugs and dirty water. But that's obviously, once again, not the case. So let's pay attention to what's going on here. And once again, we will zoom out and look at the big picture, and we can kind of figure out what's actually taking place, not just the mainstream narrative that all these idiots are regurgitating. So once again, if we look right here, you know, we have basically a bottoming pattern here. We have a single bottom right here, followed by another bottom right here, followed by another bottom right here. We have a low, we have a lower low, we have the same low here as well on the weekly, which corresponds to our points here on the indicator oscillators. We have a low right here. We have another low right here. Depending on what you look at, it is slightly higher, obviously, as you can see. And now here, we are potentially getting ready to put in a third higher low, which is actually the same low here, which once again is just another form of bullish divergence after a massive move to the downside. So while everyone is calling for much lower, value on the dollar and it going to zero, and, they're just going to keep creating infinite money and pumping it out there. And, it's the only way that we can make any, our economy can survive, and no one trusts the United States, and Russia's dumping the dollar, and all this like mainstream narratives that you hear over and over again. Well, what's actually taking place looks quite different when you look at the big picture. So here, once again, we have a massive pattern that goes back to the 1980s. Very clearly a downtrend. We have a high, we have a lower high, we have another lower high, we have a low, we have another low, and then, you would expect, obviously, at some point in time, another lower low. So that's what everyone's calling for. They're calling for a breakdown from this key support level that we basically based out on back in 2018. And obviously, you can see how these things line up, not only the charts with each other, but also with big financial shifts or events taking place, throughout the world or in the United States. So, but once again, if we look at the actual monthly chart and we use our own brain instead of just paying attention to what everyone else is saying, we can see there's a low right here. There is a lower low right here. And then if we zoom out and look at price action, we have a low right here and we have a higher low right here. Once again, that is bullish divergence on the monthly. And now what are we forming right here? When it's Bitcoin, everyone's very quick to call this out as, a double bottom. We're double bottoming. We're going to infinity. The rocket's fueling up. We're loading up the gas tank. We're packing our bags. But, when we're talking about the DXY dollar index, no one apparently can see the double bottom. It doesn't make any sense now. I'm apparently just seeing something on my own here. But once again, we look down here at the indicator oscillator and we have a low right here. And then in this case, we have a low here and we have a slightly lower low right here. And then here we have a low, we have a slightly higher low here. And then from these two micro points within the monthly, we have a low and then we have a slightly lower low on the indicator oscillator. So what I'm expecting to happen basically is for us to base off of this key level here. So if we zoom out and we put all this junk in place here, again, this is a very ugly chart. Please don't mind the total crap that's all over it, but you will see here what I have in place is if you take this exact move right here, the very first massive pattern that developed on the DXY, and then we do our bars pattern here. This is the pattern right there. I have just essentially extrapolated it. I did not have to change the size of it. I did not move it in any way, shape, or form. And yet somehow, as if done by a machine or an algorithm, it lines up almost perfectly with the exact move that has taken place right here, with the exact bounce up here. You can see it starts to deviate slightly up in this area, but essentially works out to like the same thing, which is why I had my targets way down here to begin with. So now that you have a bigger picture of what's going on, try to ignore this real quick, and we will pay attention to what's actually taking place here. I have some time cycle analysis done on this. Again, just ignore some of that. But basically what we're paying attention to is our breakdown from the key level right here. It acted once, twice, 3 times as support. We have here as resistance 1, 2, 3, 4 times. And then we finally came down, broke down from that pattern. And then if we zoom in here, again, ignore all this junk. We tried to bounce up here and failed to come back and retest that level. Well, typically what happens is once you break down from a level like this, you'll come back up, retest it, and then continue in the direction of the predominant trend. That's what was taking place. We finally got the breakout of that channel that was forming right here. And on the attempt, basically to get our measure move to come back up to retest that breakdown range. Now here we are, basically putting in a bottoming pattern on the monthly with essentially the bearish control zone, preparing to potentially exit the bearish control zone here. As you'll see that, basically we're starting to base out here. We're starting to put in that bullish divergence on longer time frames. And, we have to wait, obviously, and see how it plays out. This is a very long time period chart. So, maybe it doesn't happen tomorrow. Maybe it doesn't happen right away. But that's exactly what I'm expecting to happen. Eventually, a move back up from this level and then continuation eventually to the downside. But, obviously a fractal is not particularly reliable, but often can tell you like what bots and algorithms and market makers are like doing with price action. because there's nothing original in these charts. Like there's no new chart that does anything that's never been done before. Everything is patterns, everything is time cycles, everything is just the same FUD, the same, you know, market maker moves, the same breakouts, the same patterns. It's the same everything over and over again, which is why technical analysis is so reliable. You know, the key thing here being is that people just fail to look at the big picture. So that's why it's so important for us to think like on our own and look at what's taking place, think outside the box and not listen to like mainstream narratives and all this other crap that's going on all over the place, because none of these idiots actually think for themselves. They literally just like regurgitate the same thing they heard on like CNBC or from their neighbor. So I'm going to take a drink real quick and then we'll get into the indexes. Good to see you guys over there in chat. You know, I normally don't go onto too much of like a recap of stuff we talked about, but I just think it's important to keep some of this stuff in mind, especially when we're talking about like 40+ year patterns. You know, obviously you guys know that what's taking place right now in the markets is the culmination of a 10-year pattern, which is like a short-term cycle, very common. And then we have on top of that a 20-year cycle taking place, which once again, you know, happens fairly often every 20 years. And then on top of that, we have like a 40-year pattern taking place as well, 40 to 50, depending on how long this takes to play out. And then on top of that, we have like the overall whole macro, which is the 100-year pattern, which is very clearly what's taking place. If you look at like basically the events of, you know, the recessions, the roaring 20s, and then obviously like the Great Depression of, you know, the 1930s. So. And we're just seeing the same thing happen over again. Massive speculation, overly leveraged markets, new market participants. You know, we're ushering in the young. We're ushering in, you know, and again, this is not a sexist comment or racist comment or anything like that, but we're seeing record levels of women in the markets. We're seeing, you know, statistically record levels of, you know, blacks in the market, like all kinds of like new market participants, record levels of young people in the markets. And these things all correspond with basically exactly what happened back in like the 1920s. In order to prop up a failing system, they rely on essentially like the liquidity or the solvency that is provided by basically ushering in new uneducated market participants, creating massive bubbles and the illusion that markets can only go up. Therefore, all you have to do is just throw as much money as possible at the markets, and all you can do is win. So we'll eventually see, you know, the culmination of multiple recessions leading to a Great Depression, and then on top of that, you know, housing crisis, you know, food crises, weather crises, like all this different stuff, you know, wars. Maybe it's not going to be like, you know, our same like nuclear wars or like massive casualties in the same way that we've had in the past. You know, but it's the same narrative over and over again. It just plays out slightly different. So that's what I'm seeing taking place. And that's why I think it's so important right now to be not only intelligent, but also just to think for yourself and to understand that, you know, we all need to be like sharpening our tools. We need to be loading up our, you know, nifty belts and putting as many gadgets and as many tools and, you know, as many provisions in place so that when the time comes, you know, if we need a grappling hook, we've got a grappling hook. If we need, you know, a little snack, we've got that too. If we need whatever tool should possibly arise, we have it ready and, you know, prepared as well. So, you know, while there's all kinds of crazy preppers out there telling you you need a generator or you need chickens or you need, you know, 10 years worth of dry food or you need ammunition or you need, you know, gold or silver or whatever the situation is, everyone is in one of these little cults trying to like say why their cult is the smart one, and when the world ends they're going to be the only one who survives because they were in that cult. You know, we're here looking at the big picture at all these stupid little cults forming, and you know, we're essentially looking at it and saying, why don't we just have a little bit of everything? That way, no matter what takes place, we know it's not going to be exactly the same as it was in the past, but we're going to be ready for it no matter what. So we make sure that we have all the possible provisions we could need. We make sure that no matter what the situation is, whether cryptocurrency becomes king and, you know, Dogecoin is the master and, or maybe Bitcoin maximalists are right. Maybe gold maximalists are right. Maybe silver is the only thing worth anything in the future. No matter what takes place, maybe it's all the stock market and everything else goes to zero. No matter what it is, we're ready for it. So that's the most important thing. That's why diversification is so important. But again, like the old saying goes, we need to be careful. We want diversification, not diversification. So here we go into S&P, and then I'll jump over in the chat and we can cut up a little bit as we run through these assets. So, all right. So S&P, knocking on the door, all-time highs over here. Again, no reason to get bearish on these things while they're still just pumping to the upside. But I do think very likely that, we are getting towards the end of these moves. But it's very common after a long trending move in one direction to see like that blow off top, to see that throw over. So I don't think it's unrealistic to think that, we have this massive pattern. Once again, big picture, going back to, in the case of the S&P, I could probably switch off of the daily, but this was 2009 where we bottomed out basically back here, and we have just been operating inside of this channel the whole time. We had the little beer bounce when we broke down out of that zone, and then now here we are at the top. Here previously, we basically broke out of that zone one time in like 2014 and kind of chopped around above it, and then we broke down through it and came back to the bottom. So it is not unrealistic to think that we could have a little choppy area right here. We broke out, we had a retest, and then we came back to the same high. It's not unrealistic to think that this could end up being a double top, or that we could get like a throw over, like a parabolic move up here, a couple more bucks or whatever, and the next thing you know, we fall back down and break all the way back down to the bottom of the channel. So, I'm trying to keep in mind potential that essentially at some point in time in the next, year to 2 years from now, we could see the S&P break down here and come all the way back down and retest our previous high from back in March last year, or even lower, back to the bottom of this channel, which is down here at like $326. So the risk reward to the upside right now for me is absolutely horrible. There's almost no reward to the upside, in my opinion, for the amount of risk that you're taking, in a trade in like most traditional markets, but specifically this. And as you can see, we're at like all-time record highs, on the TJD, TDMACD, and then obviously we have, with the exception of the dump, the Rona dump, we have basically just been living in the bullish control zone on the monthly. Now, I would expect, obviously, the stock market to just go up all the time because that's the design of the stock market. More people, more money, higher prices. And the idea is to just constantly have more people investing. The idea is to constantly just have more money, available and more people on Earth. Therefore, like the prices of these things can do nothing but go up. But when we zoom out and we look at the big picture, what levels are we at on our monthly? We are at 96.7. So if you want to talk about being out of gas, running on fumes, we're at basically levels where every time we get up to those levels, one time here, one time here, one time here, one time, 92, one time here, one time here, one time here, this was the Rona, and then one time right here. Every single one of those areas where the Stochs got up to those levels was basically a massive market top. Now, in some cases, we have more of a sideways action and consolidate for a few months. And then in other cases, we have capitulation dumps taking place where we lose like, 50+% of our value. So, and now keep in mind also, once again, people forget about this or they're new to the market, so they don't even know about it. No one talks about this type of stuff. This was back in 2000. Back in 2000 when we topped out on the S&P, from when we topped out to when we bottomed out, was a 50% move to the downside. And that 50% move, this was in March of 2000, and it didn't bottom out until like November of 2002. So you're talking about over 2 years of just steady grind down while we lost 50% of our value. And then if you pay attention to it even more and we zoom out again, if you look once again from March 2000 until we reached that top again here, that was in August of 2007. So the stock market basically, if you were in the market here it took you 7 years to get back to that same level. And when we got back to that same level, what did we do? We double topped and then we capitulated. And when we capitulated from there, we went down another 56%. So, realistically, it's only another, few percent from the previous bottom. But now here you are 7 years later, finally back to, even where your portfolio, where your, IRA, whatever, your investments were back to where they were previously. And then what happens? You lose another 56%. So then if you look at that once again, until we retested it the next time and then finally broke through it, that was January of 2013. So that was a 13-year period of basically the stock market going sideways. So people forget about that stuff, or they don't know about that stuff, and they think stocks can only go up, prices can only go up. Well, just remember, if you need that money anytime soon and you're stuck in an asset for 13 years, you have no choice but to sell that asset if you need that money for something else. Or you can just sit there and wait it out if you're young enough and you don't need that money. So that's why it's so important. I know everybody is saying, oh, dry powder on the sidelines, you're crazy. Record amounts of cash on the sidelines. Like, what are these idiots waiting for? A confirmation? Like, we're at higher highs. Well, this is what intelligent people are paying attention to, is that, you don't want to be fully deployed and then all of a sudden you get a 13-year period of sideways to down action where you could have literally, if you sold up in this area and then repurchased here, you could buy the same stock, just twice as much of it. Same right here. Same stock, but twice as much of it. Or if you just use that money for 13 years anywhere else, and make any amount of profit along the way, let's say roughly 6% per year profit on that investment, by the time you get back to that same level right here, using the rule of 72, if you had $1,000 at the beginning of this crash and you took that money out and you deployed it somewhere else making 6% a year for, basically the math works out to 12 years, you will have twice as much money to go reinvest. So you could either sell the top and buy the bottom and have twice as much of that asset. You could sell the top and buy the bottom and have twice as much of that asset. Or you could sell the top and then wait 13 years and put your money somewhere else to work and have twice as much of that asset. So there's so many different ways that you can multiply your investments or savings exponentially if you know what you're doing and you follow the technicals. Or you can just sit sideways and do nothing and just end up 13 years sideways, in the markets, having to deal with these massive moves to the upside and then to the downside, and just pray to God that you really do have diamond hands, because all these people who have quote unquote diamond hands, I have a feeling that they really have, cotton hands. So we'll see how it all works out in the end, because I honestly think that more likely than not, we're going to see another massive capitulation event, crash, something like that. And even if I'm wrong and we have to buy back higher, once again, we can put that money to work somewhere else, or we at least have the security in knowing that we're not going to end up in one of these events right here. So that's why I think it's so important to keep in mind, once again, the big picture of all this stuff, because most people are using money that they cannot afford to lose, or they cannot afford to just have go sideways for 13 years. And I don't talk about my personal life a lot, but, I got into the markets back in this time period. I dealt with this. I firsthand saw all of this take place and participated in this take place. And I'm going to tell you the truth right now. Every single time in my life that I have made like a horrible financial decision, it was always because I needed that money for something else. I had to either sell out of something because I needed that capital for somewhere else, or I had to sell a property or possession because I needed that capital for something else. Okay. And I haven't always been financially secure. I was young once. I was poor once. I've dealt with all this firsthand. So I have experienced this. And I'm telling you from my own experiences that every time I have made a horrible, horrible financial decision, every regret I have or lesson that I have learned in markets or selling assets or whatever along the way has always been because I needed that money somewhere else. And every one of those times was not necessarily because I needed the money because it had gone down 50% and I was giving up on that asset. Every capitulation event that I have experienced specifically in my life was a time capitulation where I needed that capital or I needed that asset gone or whatever the situation was because I needed it for something else. I didn't have a choice. And that is the most important thing. Is there's two types of capitulation. There's price capitulation, where you give up because something is going down and you're losing too much. And there's time capitulation, which is where you give up because you cannot sit sideways in that asset or whatever the situation is any longer. So I'm telling you from my own personal experience, while it's 100% possible that these markets continue going to the upside, and we could even see a blow off top or parabolic move, or even continuation, a breakout, and then just follow through for the next 20 years. And, some unexpected event happens, whatever. We go back on the gold standard, or the whole world is nifty, or aliens come, or there's a solar flare and it knocks out. There's no way for us to know what's going to happen in the future. But I can tell you based on what's happened in the past that, we are at key levels to pay attention to. And I can give you the wisdom that I have based on the mistakes that I have made, and tell you the last situation that I want to end up in, and that I think, most people that are intelligent want to end up in, is having to capitulate, not because they had a choice, but because they had to make a choice. And then, you can either regret it for the rest of your life or whatever. Some people make horrible financial decisions and kill themselves. Some people lose their wife. Some people lose their house. Some people just are mad because they're rich and it wasn't that important, but it still sucks. That's all. Those are opportunities or possibilities. But I'm telling you right now that, I'm not going to make that mistake again. I know when we're in a bubble, every asset, we're in like the everything bubble right now. So I am right now protecting, more importantly than anything, my dry powder, and just sitting on the sidelines, twiddling my thumbs while I just wait for what I know to happen inevitably. So, and again, if I'm wrong, that's 100%. You guys have heard me admit that I was wrong about something in the past, and I will continue to do it in the future, because once again, that's something I've learned over the years, is when you're wrong and you figure out that you're wrong, it's okay to admit it and keep moving on. And that's exactly what I'm planning on doing here. So, I just wanted to go on a little bit of a tangent about that, as I feel like people are losing sight of the big picture, or they've never participated in the big picture. And right now, I think it is extremely, extremely important to not only diversify into different asset classes, real estate and stocks and cryptos and precious metals and all that stuff, but no matter what, if you think that the currency is being devalued, which it obviously is, we have factual proof of that, just make sure that you're not scared about some little 2 or 5 or 25% devaluation that's going to scare you out of something, and then you're going to end up losing 50% or 75% or more in something else because you were afraid to lose a couple percent. And that's the main argument I hear from everyone, is cash is being devalued at 20% per year. So you're going to lose 20% of your money if you just don't throw it into some overly hyperinflated asset right now. And then next thing you know, it capitulates 50% or, goes sideways for 15 years. And then you think, man, I wouldn't mind losing 20%, in an asset that was about to go sideways for 15 years. So, but anyway, we can keep running through here. Dow Jones is next. Okay. Dow Jones is next. Doing the exact same thing. The Dow and the S&P look almost identical. Once again, let's just zoom out to our big picture. This is the old 100-year chart right here. Again, I finally am seeing this start to surface in other places, and other people paying attention to this after talking about it for months and months and months. But essentially going back to this is not 1997. This is 1897. The Dow Jones went sideways in this upwards channel from 1897 until 1826. No, wait, 1897 to 1926. And then it did exactly what I'm talking about right now. Went sideways in this channel and then went to a parabolic blow off top or a throw over. Now, when you look at it on a 100-plus-year-old chart here, it doesn't look like that long of a time. But from when we actually broke out here was in 1927. When we actually topped was in 1929. So you have a 2-year parabolic uptrend after the breakout. So now here from that point to the sell-off, we now have a 100-year, basically 100-year channel going up here, where we have very clear touches on the bottom of the channel, very clear correspondence on the top of the channel, and now here we are at the top of that channel. So it's not unrealistic to think we could just go parabolic to the upside for 2 years and gain another, I don't even know what percentage that was, but from basically the breakout to the top right here, the Dow went up another 150%. So that's why it's important, in my opinion, to be invested, but also have dry powder on the sidelines, so that if we do get another parabolic move up like that, we gain from it. And in the event that we get a capitulation move back to the downside, we gain from that as well by being able to purchase more of the asset cheaper, or have that powder so we can deploy it somewhere else. Once that went parabolic and sold off here, we can just look at that from the top down to the bottom. The Dow Jones lost 90% of its value. So people think, a 50% move is a big deal, or it's never going to happen again, or 20% is a bear market or whatever. Well, what is 90% to the downside? Because I don't think anyone that's invested in any of these markets, with the exception of maybe crypto, I don't think anyone is like legitimately considering the probability or possibility even of a 90% drawdown in your investment. So, I just wanted to look at the big picture once again and keep that in mind, and just pay close attention to what's taking place and how this 100-year pattern looks familiar and could be potentially playing out. So again, I'm not going to pull up like an actual fractal of the old 100-year pattern, but we basically touch the top, come back down to the bottom, touch the top, come back down to the bottom, go to the halfway point, slightly find support above the bottom, go to the top, and then we just bounce our heads on the top here and then finally break through. And again, we have bottom, 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 bouncing off the heart line, coming all the way back up to the top, double top scenario, back down to the heart line. And now here we are just bouncing our head over and over again at the top. And then inside of that massive pattern, going back to our 1981 low right here, that was obviously a very key time in history. And again, this was one of those times when from 1966 till 1983, okay, from 1966 till 1983, price action went sideways completely on the Dow Jones that entire time. So, and then suffered along the way multiple drawdowns, roughly, 40+% to 50%. So again, this is what I'm talking about just going sideways capitulation. By the time this ended up here and we ended up down in this area, no one was left in the stock market. There was no one invested still in the stock market in the 1980s. Everyone had given up because it had been going sideways for, what is that, 66 to 82? So for like 16 years, this had been going sideways. All right. So it's very important, once again, that we look at history, and the likelihood is, everybody's heard that history doesn't repeat itself, but it often rhymes. Well, that's exactly what I'm paying attention to right now, because the fact that these cycles are playing out and it looks awfully eerily familiar, and you have the same market makers and what was at once millionaires and central bankers that are now billionaires and trillionaires, and all this like market maker whale bankers and all this stuff going on, and it's just a bunch of patterns happening over and over again, and it's becoming exponentially more clear as things play out. So but from that point here back in the 80s, we have a very clear bottom here, we have another point here, and then of course our COVID low was right here. That was the one, obviously, that was very clearly called out by the one and only crypto trend trader. That's when I started this channel, to warn everyone that we were about to have a 50% capitulation dump, which I obviously called out within 1%, at which point in time, obviously we came back up now, and here we are at the top of that pattern. And then again on the monthly, if we pay attention here, to what's taking place here, we now have once again a pattern inside of a pattern inside of a pattern. We have pattern inception taking place here. We had this giant megaphone pattern, which this is the one people talk about. People talk about this from 2018 till now. They're looking at basically like a 3-year period. We're looking at like a 120-year period. But here we have broken now out of all those different levels. We broke out of the top of the purple, broke out of the top of the red, and now here we are just basing out up here. But we're getting our divergence signal on the weekly. Sell, buy, sell, potentially getting ready to cross this. We've already crossed it to the downside, but potentially getting ready to sell and exit the bullish control zone. At which point in time, we could very likely see, one of these capitulations take place, which again, we could easily have a throw over to the upside first, but it's not unrealistic to think we could get a 41% drawdown back down to our green support right here, or the event that we have, or the, basically what I call like the 100-year cycle, which would take us back down to the bottom of our 100-year pattern here. Where does that come down to? That's an over 80% drawdown in the Dow Jones Industrial Average. And then where does that line up with? Well, it puts our price in line at roughly like $6,800. Well, historically, if you look at when these massive capitulation events took place, if you look at the Dow to gold ratio, what one stock of the Dow Jones Industrial Average in comparison to one bar of gold, 1 ounce of gold, 1 coin of gold, whatever, they have historically during these corrections come back in line at a 1-to-1 ratio. So is it unrealistic to think that the Dow sells back off to like that $6,000 to $8,000 range? I don't think so, not at all. Is it unrealistic to think that in the event, if a capitulation took place that lasted for 10 to 15 years and brought us down 80 to 90% in the stock market, is it unrealistic to think that at that time gold could then go up to somewhere in between $7,000, $8,000, $6,000, $8,000? Not at all. So I think very likely in the future, I can't guarantee you that between $6,000 and $8,000 will be the bottom of the Dow and the top of gold in its cycle. But I think based on historical patterns, based on time cycle analysis, based on everything that's happened in the past, I think there's a very high likelihood in the next decade that gold and the Dow Jones cost the same amount for one stock of Dow and 1 bar of gold. And where does that end up at? Probably somewhere around $7,000 or $8,000. So, but yeah, that's our big picture view. And that's and the beauty of all this is that I've actually heard other people, intelligent people, talk about little bits of the puzzle that we're looking at right now. But each of those people has this one puzzle piece in front of them, and they say gold is amazing, stocks are garbage. In the future, the Dow Jones will come back in line 1-to-1 with gold. And they have this one little piece of the puzzle. And I say, that's right. You have that piece of the puzzle and you've correctly identified it. And when you take all the rest of the pieces, what does the puzzle look like? And they say, well, I just have this one piece and it's the only thing I can see because on the back of it is the name of the cult that I'm in. But the most important thing is to figure out, you have a piece of the puzzle, you have a piece of the puzzle, you have a piece of the puzzle, you have a piece of the puzzle. And then we have like the box from the puzzle. Okay. And that's why it's so important. And what we do here is so different. We have this big box that shows what the puzzle is going to look like when it's fully completed. No one else has the box. They just each have a piece and they're squandering their one piece, telling everyone why their piece is so important and they have the best piece and it's the greatest piece, but none of them have the picture. None of them know what the puzzle builds. They don't know what's going to look like, when it's all put together, but we do. And that's why we're at such a big advantage here. So, but anyway, another rant. IXIC, NASDAQ. This is what we're paying attention to, ladies and gentlemen. We have our ascending triangle here. And, I don't know what's going to happen here. This is a bullish pattern, 66% likelihood to break to the upside. We've been going through quite a correction here for some time. More often than not, we're going to break to the upside. We're going to get our measure move potential back up here. Measure move of the pattern is going to take us up to our 18% move on the NASDAQ. New all-time highs, $16,065, or potentially, if we get our full extension, it would be $17,596. Do I think that's going to happen? Maybe. Do I expect that to happen? Maybe. It's a bullish pattern. More often than not, it breaks to the upside. So I'm going to have to pay attention to that one. But we know one thing for sure. We know that the majority of these markets, especially these indexes, are going to operate in line. And we also know that tech is the most dangerous. NASDAQ is by far the most dangerous because it relies on low interest rates and high speculation. So if there's one thing that's risky right now, it's some shit coin that I've probably never even heard of. But if there's two things that are risky right now, it's shit coins I've never heard of and the NASDAQ. So Russell 2000, there's a statistic I saw not too long ago that's something like of the 2,000 companies in the Russell, I think over 500 of them don't even make a profit. There's or maybe it was 50% of them are zombie companies and can literally only afford with low interest rates to pay, to service their debt basically. So they never pay down the principal. They're just making minimum payments on their credit card. Not to mention times are changing. The markets are shifting. It's unsustainable. So I think more likely than not, we are going to see a collapse in the Russell 2000. All right, so we'll get into our we'll take a look at ICLN, XLE, XLI, XLF, XLU, and US oil. In just a moment, I'm going to grab a drink and take a quick break. All right, back in action. Matter of fact, I'm going to jump over in the chat real quick and say what's up. Bubblies with the popcorn. Sean CZ, good to see you, my man. I'm doing extremely well. I hope you are as well, my man. R Kits, aka K Ritz. Good evening. Good evening to you, sir. Poor guy. He's like, that's like his permanent nickname now. Load up on that Smith & Wesson. Yeah, man. Nothing like that American quality when it comes to bang sticks. 40% in crypto, 10% in traditional markets. Wait, Did I miss something? 40% in crypto, 10% in traditional markets, 50% in cash. Is that what I'm? Hey guys, nice to see you here again. Close, mid, and long range. Yeah, that's what's up, man. Hell yeah, well, it's good to see all you guys. I hope everyone is doing well. Looks like we are. I'm going to um, finish out the indexes here, and then you guys just let me know if you want to do like crypto next, or what's up, Super JDE? It's so annoying because I have the chat on like my other monitor, and in order to like put the boom exactly where I want it so I don't get like that weird kind of like popping from my mic, it like blocks that other screen. So I have to like kind of peek around the side of the boom. It's kind of funny. Good to see you, my man. But yeah, let me know. I think we could probably do crypto next, and then we can get into like tech and commodities afterwards. Doesn't really matter, however you guys want to do it. Jump around a little bit. Pidgey Pot Pie, good to see you, my man. I don't understand how only 10 people are watching this analysis. This is such good stuff. Hey, thanks, my dude. I appreciate you. The truth is, honestly, in my opinion at least, I think most people don't want the long end of it. Like they want like signals. They want you to be like, buy, come rocket, because it's about to go up 200%. You know, which explains why like Elon Musk tweets are like the #1 like market mover in existence. Most people don't want to see the big picture. They don't have the time or care to learn how to actually do anything. I'm all about like self-sufficient, like, you know, the old biblical adverb or whatever you want to say. You know, you can give a man a fish or you can teach him to fish. I obviously would, I don't mind giving you guys some fish, but I would much rather everyone learn to fish for themselves. Because the truth is, you know, when the time comes and everybody's ready to learn and figure out what happened, it's usually because something has already happened and they're trying to figure out how so it doesn't happen to them again. Exactly. Moon, 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 man. But the truth is, man, it only really takes one good cycle to make that big money. So, you know, you can have very little and 10 years later have a lot. And matter of fact, I was thinking about doing another segment, something for like the long game. Like, you know, I know I have a lot of people that view from all over the world or whatever, but everybody has like similar financial assets or like tools available to them. So I was thinking about doing something where I had talked about a while ago, you know, putting like $1,000 into an account and trading it like with the group or on the channel or whatever, and showing how exponentially we can grow it over time. But the truth is, because like for like swing and scalp trading, the trades are just so often or whatever, I was thinking about doing it more as like a long-term investment thing and being like much more like I said, long target in mind, you know? So I was thinking about actually setting up like a separate IRA. And I know I push people all the times into IRAs, but it's so important, and like the time value of money and, you know, just compounding and everything, that people don't realize how it can grow over time. So I was thinking about setting up like a separate IRA that I could basically just, you know, whatever it is, once a week, you know, make a basically investment or purchase in that IRA, and then we can just check it over time together and grow it over time, and everyone can see, you know, how, I don't want to say easy, but how these markets can work for you. And then, you know, even 1 year, 5 year, 10 years down the line, you know, you could have looked back and seen every single stock that was put into it, you know, whatever it is, every single investment, how it's compounded over time, how long it actually takes to like double, how, you know, just the whole long game of it. So, and again, maybe that's a little too far-sighted for most people, but it's just something I was thinking about. And like, I'm all about teaching people the importance of investing and the long game, and sharing some of my like wisdom and knowledge and everything, like with the community. And I really do look at this as a long game. Like, this channel is like a year and some change old, not even 2 years old. And I plan on having it for 10 years or 15 years or 20 years or however long, you know, whatever. So I don't see any reason not to be looking into it like far-sighted. I don't think I'm getting rid of it anytime soon. So I don't know why I wouldn't just start working on like a 10 or, you know, 20-year plan for like a video series. So that's definitely something I've been considering. And also I think it really can, like, you know, in it demonstrates so many important factors like consistency, like smart investing and value investing, and like I said, time value of money, and like just all these very important things that when I talk about them, they sound important, but when you see them in practice, when you look at like a video playlist and it goes back 5 years, and you say, okay, I've been, the maximum for an IRA, if you're under the age of like, it's like I think 50 something or whatever, you can get $6,000 tax deferred per year. Or if you're low income, if you're coming right out of high school or college or whatever, you can get like a Roth IRA and pay no taxes on it. You pay the taxes up front and then you invest. And then when you take the money out, as long as you wait a certain amount of time, etc., you don't have to pay any taxes on it because you've already paid them up front. So I'm not eligible. I can't do that. But that's what I would recommend for young people or people that don't have like a high income. But I think if like I started just a regular IRA and, if you break down the maximum, like I just basically did it publicly from scratch with everyone. So it's like you could do the same thing if you wanted to, and it demonstrates how well it works. But if you break down that $6,000 over 12 months, it comes out to $500 per month, which is like $125 a week, which in all reality, you could be making $500 a week and still figure out a way to swing $125 a week into an IRA. And, we can do it together, look at it, see what's up. And I think people would be honestly surprised how quickly, that $125 a week can turn into, now you're a millionaire. So that's what I'm thinking. That's, again, it's kind of like a long game. I'm sure there's going to be some drawdown along the way. But like when I look at my like portfolio or whatever and see like the percentages I'm up on things and how exponentially like it grows, and then we think about like 1 year cycles, like quarterly cycles, and then you think about 5 year cycles, 10 year cycles, 20 year cycles, 100 year cycles, and you start really thinking about that stuff, how just exponentially like we can all basically grow together. And I think sometimes if I just, some people don't have any money in savings, or they have a couple $1,000s, or whatever. So if I just like get on here and I just like put $10,000 in an account and start trading with it, and you see me double it, you're like, oh, that's awesome, now I have $20,000, but I only have like $200, so I can never do that. And it's like, well, you can do that, but it just doesn't, it's not as relatable if it's just like some big number, or if you see something that's already been building on like exponentially for years or whatever. So I think if we did something like that and started from scratch and just, instead of just having like this like trade of the week where I buy like a stock or a couple stocks or whatever, if we just start doing it into like a series and grow it together, like, the community, or you can just follow along and learn from it. You don't have to do anything I do, obviously, but just actually see it in practice. And then, if you look back at the video 2 years in the future or 5 years in the future, and you say, holy crap, this dude started an IRA from zero, and like 2 years in had this much, 5 years in had this much, this is what he bought, this is when he bought it. Because a lot of times what happens is people will say like, oh yeah, well I bought at the bottom of the woo-foo crash or whatever, and I'm up 600% on Tesla, or 2,000% on Tesla or whatever. And you say, yeah, well, that was a one-time thing. Like, you can't just do that whenever you want. Or somebody says, oh, I bought, Dogecoin at a penny, or I bought Bitcoin at $4,000, or I bought, Ethereum at $80. And you say, yeah, but that you can't buy Ethereum now at $80. There's always a bull market. There's always some crazy, amazing investment that you can make. And I think that people get discouraged because they always see something afterwards and say, damn, I wish I would have caught that. And it's like, well, the fact that you're paying attention, just catch the next one. There's another one coming around. Like, and I think people don't realize that. Like, when crypto was going parabolic, when Tesla was going parabolic, and then in the future when cannabis stocks are going parabolic, people are going to look back and say, oh man, I wish I would have invested in it back then. Well, that's easy to say. But I just heard somebody say this recently. In order to buy things, I think it was Rick Rule was talking about, the important way to like exponentially grow your wealth is you got to buy things when they're cheap, and then you got to sell them when they're expensive. But in order to do that, you have to buy things when they're cheap. And that's exactly what it comes down to. So I think this would, again, another rant, did not mean to go on, but, this was an idea that I had. And, I've had a I have a bunch of like younger friends that essentially are looking to get involved in investing or have gotten involved in investing in the last year, a couple years, or having kids and now are starting to think about like responsible things instead of like, off-roading trucks and vacations and bars. So they're wanting to like learn about investing and IRAs and retirement funds and all that. And, it just made me think like, man, that would be a hell of a series. Long game, once a week, 125 bucks, and we put it into X, and then the next week X, and then just stop back on it. Doesn't have to be some long video. Maybe each one is 15 minutes or 30 minutes, doing the technical analysis specifically on what we're getting ready to buy or what we're considering buying in the next week or whatever, and then just like touching back on the portfolio and just watching it grow together. So but anyway, let me know what you think of that. If you think that's something that sounds cool or you might be interested in. But the truth is, I've all but made up my mind that I'm planning on doing that anyway. So I'm going to jump over here and then we'll just keep rolling real quick. So feels so good to be early. And yeah, 100%, man. Heavily into gold very soon. Financial advisor, by the way. Magnified if it's Roth. Yeah, man, the truth is, if you actually like do the math, Sean, it's actually not as beneficial as you think, a Roth IRA. The truth is, the only way a Roth IRA really benefits you is if you're in a low tax bracket now, because later on you're going to be in a higher tax bracket, or if there's actual like government policy changes that lead to like higher taxes in the future. Because the truth is, if you pay, like, let's say, for instance, you're in like a 30% tax bracket now. If you have $100 and you put it in a Roth IRA, but you're in a, 30% tax bracket, you put $70 in. And then if you're in a regular IRA, you put $100 in. And then if you double that money, let's say, just to keep it simple, the $70 is now $140 and you've already paid your taxes on it. Well, the $100 doubled becomes $200. And then you pay your taxes on that. And if you end up in a 30% tax bracket and you pay 30% on $200, what do you end up with? You still end up with $140. So it's actually exactly the same. The only way the Roth IRA actually benefits you is if you're in a low tax bracket now, and in the future you're going to be in a higher tax bracket. Or if you're in whatever tax bracket you're in now, if taxes in general are just higher in the future. Which statistically, if you look at history, like taxes basically do, there's two things that always like go up, like the amount of government consumption and the amount of taxes that you pay. So, but with the exception of something like, like Donald Trump coming in and lowering like corporate tax rates, or Biden coming in and saying, he's going to raise the like capital gains tax from 20% to like your income level, like things like that can affect it really on the macro. But the truth is like in all reality, it's just about how much percentage wise you can get away with paying the least taxes now compared to how much percentage wise in the future. Which, if you think about it realistically, if when you're old and retired, you no longer have an income, and then you just start drawing out of your IRA, like if you don't have an income, you're going to be essentially in the lowest tax bracket. So if you're taking like $100,000 out a year, like, you end up, obviously it's a tiered tax system, but you're in like the $100,000 tax bracket. So if you're already in $100,000 tax bracket now, which you're not even eligible for a Roth IRA, if you are, I think like 50 or 60,000 is like the cutoff. But it basically works out to be the same. It seems so much better to just pay the taxes off the top and then grow the money, but you end up with so much less capital that the amount of growth like compounded ends up to be like less in the future. But again, that little example says it better than I can with 10 times as many words. Yeah, I think it's a good idea. I appreciate you, Bubblies. Thanks for the feedback, man. Sounds like a plan. Yeah, hell yeah. And I think too, like, as you go and it goes week by week, it's like, oh, this is cool, this is fun or whatever. And then when you look at it after a year or 2 years or 5 years or 10 years, you're like, holy shit, this is amazing. Why don't they teach you this stuff in school? Well, because they want you to be a debt slave. Hell yeah, man. Well, hey, I really appreciate Super JDE. Appreciate all the positivity, guys. And sounds like everybody be interested. And if you're watching this video later on, please feel free to comment and let me know what you think as well. But with that being said, we'll jump back into it. But I do want to remind you before we get rolling again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly or invest responsibly. Don't buy things with words like moon in the name or rocket in the name, and especially don't invest in things that have come in the name. All right, so ICLN, clean energy ETF here. Let's check this bad boy out. This is basically, it's basing out a descending triangle, bearish pattern. Obviously it has broken down officially below our 200 exponential moving average, the bright blue right here, and then also the 200 simple moving average. We have almost a flat slope on this thing. This, I think, was just another dead cat bounce. It looks like it's getting ready to dump. We are above the slope line. We do have some red histograms kind of selling back off here. This is an overall bearish pattern. It looks more likely than not like it's going to break down from this level and get our measured move. We've seen quite a few of these actually break out to the upside, and it looked like we were getting ready to and potentially having the measured move, but more likely I think we're going to get this move right here eventually, and we should be able to get a much better entry point. I think realistically, at bare minimum, we should be able to get this under 20 bucks. But I think realistically, we'll be able to get it for like 16.67. So this is one that I am bullish on in the future. But overall, I think we're just playing the waiting game on this bad boy. And clean energy definitely has some serious potential. I like it. I like the space and everything, but not now. XLE, this is our energy ETF. Vanguard fund. Obviously took some profits along the way. Hit that trade very nicely. Never got back down to retest our breakout right here for a re-entry, but still in this trade with a percentage of our position. I do expect follow through to the upside, and to tell you the truth, I think that we're actually just completing our wave 3 of the larger 5-wave structure. So I really am looking at this key level up here at like 74 bucks as a target. So while I'm not particularly interested in buying into very heavy resistance, this is going to be very strong resistance, this whole area right here, which is where we're at. So I'm not interested in buying in this area. If we do get that pullback that I'm looking for back down to this support level, whether it is after we complete the 3 or before we complete the 3, I will be looking for, to put back into this position. But as far as I'm concerned right now, we're in like the no-fly zone. But in all reality, based on this 5-wave structure and my targets to the upside, I think we're going to get up to 75 bucks, at which point in time we'll see a heavy retracement. And then eventually I do expect, let's switch out to a longer time frame. And again, this could take a while, but I do expect this thing eventually to make new all-time highs, which the previous all-time high was 100 bucks. And if we look at our Fibonacci extension just to the 1.236, it's 143. Should we get as high as the 1.618, 250 bucks? So we'll have to see. There's obviously some serious meat left on the bone for this bad boy. But again, we're kind of in that area where there's so much overhead resistance. And before we at least were getting a value trade back up to those levels, buying into like some resistance here. But where we're at right now, it's tough to take an entry off this, because on the monthly, we're seeing a bunch of green histograms. We're getting that blue flip on the slope, which is like ideal situation. We're leaving the bearish control zone, getting the hard buy. But, that was back here when this thing was like 30 bucks. It's basically doubled since then. So I just don't see the value at the levels we're at. On the long game, for sure. I mean, if we were going to buy something and just sit on it for 10 years, I definitely think this would be looking good in 2 years or 5 years or 10 years. But we could very easily see a heavy drawdown still from the areas that we're at right now. So while I am obviously bullish on energy in the future, I'm not particularly bullish from this level for an entry at least. So XLI, the industrial sector, again, very bullish on it long term. But once again, we're at all-time highs on this thing, obviously, very clearly. But we're at the top of the range. We're very clearly operating inside of this channel. We are operating in the top 50% of the channel for 90% of the time. But here we are basically getting ready to bump our head on the top here. So while we could easily see another 10 to 20% move to the upside, I think after that, we really have to be careful, because if we bump our head up here at like 120 bucks, oops, just like I bumped my mouse. If we bump our head up here at like 120 bucks, we could very easily come back down another 36% to the bottom of the channel, or somewhere around that range. So, 10 to 20% to the upside with a potential drawdown of 30% is like the opposite of what the risk reward we want. We want like 2 to 1. That's like 1/2, or like 1/3. So there's just, from where we're at right now, there's too much downside potential and not enough upside potential. But again, very bullish on this long term. I think the likelihood of seeing, massive infrastructure spending and the industrial sector performing well in the future has an extremely high likelihood. But in all reality, we could easily see a prolonged period of no industrial growth, or very little growth, or, very poor spending of quote unquote infrastructure, rather than like what you would consider traditionally infrastructure, like fixing lead pipes for people to drink out of, or airports, or roads, or highways. Instead, we could do stuff like childcare and, I don't know what you want to call it, like liberal hippie infrastructure. I'm talking about traditional infrastructure, and that's what that stock measures. So, or that fund. So XLF, financial sector. Oh, and don't be offended by any means if you're like a liberal or a hippie. I have nothing against you, but we need all different types of people with all different types of views. We need artists just as much as we need bankers and politicians. But you do what you do and I'll do what I do. So XLF, financial sector, once again, this is, I honestly just don't love this right now. I can see, we broke out, we're at all-time highs, broke through basically what was the equivalent of a triple top. It looks overall bullish, but we're at, elevated levels. We're in a blue sky breakout. So chances are we continue to the upside, but fundamentally, I struggle a little bit investing in anything like banking related, as I sense in the future that Janet Yellen is going to have some, let's say, butt heads with the Federal Reserve and other important parts of our government. And the talk of Fed coin and stuff like that, essentially the idea behind like a central bank digital currency is basically just saying F you to the banks and kind of cutting them out of the picture. So while we could see a recovery and financials like booming to all-time highs as banks start to lend and everything, I could also very easily see massive drawdowns in the banking sector as people all of a sudden can't afford their credit cards or can't afford their houses that they bought in the last 5 years or 1 year. They can't service their loans or service their debt. The Federal Reserve basically throws them a big FU and jumps them in line and, cuts them out of the picture. Because what people don't understand right now is all the Federal Reserve is really doing is they're just shifting like liabilities or like they're moving stuff from one balance sheet to the other. So when the Federal Reserve, quote unquote, like buys all these treasuries, all they're really doing is they're just shifting like treasuries, and they're basically just shifting like liabilities and assets from a bank's balance sheet onto their balance sheet, but nothing is really changing in like the actual financial like picture. Like the debt didn't go away. There's no new loans created. There's nothing changing except for it's just who owns the debt. So in all reality, like big picture wise, it's basically just like taking money out of your left pocket and putting it in your right pocket, or taking money out of your right pocket and putting it in the left pocket. When it's all said and done, you still have the same amount of money. It's just in a different pocket. And that's how I look at like the difference between the Federal Reserve and like the micro banking system. So, and that's kind of my argument with like the whole money printing thing and like M1, M2 arguments and everything is, if you look at one little portion of the big picture, you can make so many arguments like we're inflating the money supply. Their cash is being devalued at 25% per year. The Federal Reserve is going to own everything. Like excuse me. But when you look at like the big picture, like nothing is really changing. So I think that there's potential for actual macro changes to happen. And that's where this sector becomes increasingly dangerous. Because if people start defaulting on their mortgages, if people stop paying their credit cards, if all of a sudden like all these mortgage-backed securities start defaulting, or, you know, whatever the situation may be, the Federal Reserve makes a digital, you know, dollar instead of a digital yuan or whatever, that completely can screw over the banking sector depending on how policy adjusts, etc. So for me, fundamentally, long term, this is one of the most risky sectors. So while we are in a blue sky breakout and there's definitely still potential for continuation to the upside, I am waiting for at least a pullback back to like a key level, like a retest of our, you know, previous top right here, which essentially we have basically a triple top that we've broken out of now. So while typically I'm very bullish on blue sky breakouts, I would much rather see us come back and retest this key level and then take a purchase off of like the $30 level than just start buying into a blue sky breakout when this could legitimately like break down from these levels. And, you know, I don't want to say like go to zero, but, you know, if the Fed completely screws over like the banking sector or whatever, you know, maybe it does go to zero, at least some of it, or it just gets absolutely rocked. So, but again, that's big picture versus small picture. Small picture, I definitely think there's still upside potential. We're above the 200 exponential and simple moving averages, trending to the upside. We do have to be careful of some potential bearish divergence developing, like on the daily. But if we got back down to like that $30 range, I would probably be more likely to take a position. XLU, and again, that's all macro stuff. It's not just going to happen overnight, you know. But if there's all of a sudden like the Fed is like, we finished our Fed coin, it's like, oh shit, it might be too late by the time you hear about that. But the fact that they're talking about it now means probably in the next like 1 to 2 to 5 years, depending how horrible our government actually is compared to like our perception of how horrible they are, you know, it could happen anytime in that period. So XLU utilities, you know, this thing wants to break out. It's tried basically. We had a little wick up here. We had a little wick attempted breakout here and here. Broke out here, capitulated back down, and now here we are doing the same thing again. I think more likely than not, we're just going to break back down inside of this little channel, but eventually bullish. You know, we got the buy right here at the top, and then it failed. We got the sell right here, and then it tried to push back up again. We have the red slope line here. We're below the zero. I would like to see a little bit more of a sell-off or sideways action here, but eventually I do expect this to break out to the upside. It's not getting to new all-time highs yet by any means. That's up here at like $71. So another like 10% off the all-time highs. But I think more likely than not, we'll see a situation like this where we get like a sideways to down consolidation, followed by like a nice bounce when we break out, get like the measure move breakout of our pattern right here. You know, basically just the top to the bottom. Maybe this is it right now. You know, when we come back up here and bump our head on the top and fail, maybe we get it down in here. But I think realistically, it's just going to end up being like an A, a B, and then a C correction. And then if we can get back down to like the 200 exponential or simple moving averages, I'd be looking to take like an entry off of those levels, you know, somewhere down like, you know, somewhere down in like that $60 range. But again, that's what, it's $2 down from where we're at right now. You know, this, you're probably not going to get rich or poor off of this right here unless you're using ridiculous leverage. So US oil, you know, I mean, oil is very far from its previous all-time high. It's still down like 50%. It's very hard to find an asset, commodity, whatever, that that's still 50% off of its highs. I'm extremely bullish on oil on the macro. I hate this chart so much, man. Extremely bullish on oil on the macro. The previous all-time high was back here in 2008, and that was like $140. So again, we're like half of it. In the bullish control zone, trending powerfully to the upside. But again, you know, depending on how everything works out in the future, whatever, say we go green or whatever, we still need oil to build all the stuff that has a green future. Solar is really not there. Turbines are really not there. There's like this, you know, 30-year movement against like nuclear power and how it's bad for everything based on like two events ever with like a handful of casualties. And it was bad, it was messy, but technology has come along exponentially since then. So I think in all reality, like if you ask me what I'm massively bullish on, if the human population is going to continue to further itself as a whole, I would say probably oil and nuclear power. So, and both those things are down massively from their previous all-time highs. So while this may not be the absolute best time to get into oil or, well, oil or uranium after like such a nice run up here, I think these things will be back at all-time highs before long. So massively bullish on oil. Again, though, not necessarily the best time to buy. But, I don't think you're going to get wrecked on it either. Even if it goes back down to zero again or negative. But in uncertain times, I think this is a tough one. Could we see the economy like scream to a halt again if we have another scare like we did back in March? Yeah, we totally could. Or if whatever, some big macro changes, I mean, we totally could. And that's why right now, this just does not interest me, but is very, very interesting sometime in the near future, but not now. All right, so let's jump over to phase out on the Roth IRA is 124. Okay, there you go. Yeah, nuclear is 100% the solution, man. I was watching this thing and it was talking about how basically like, everybody talks about carbon footprint. It's real big in Europe, not as much here in the United States. But they were talking specifically about, how much in your entire life, 80 years on this earth or whatever, that you could take a Coke can and you could fit the nuclear waste of an entire person's entire existence on earth inside of a Coke can. As where if you take like, your carbon footprint for your entire life, it's obviously like massively more detrimental to the environment and global warming and all that stuff. But again, it's hard to explain to like a humanitarian or an artist why nuclear power is good, because they're just going to say, but Chernobyl. All right, so let's do crypto next. All right, so we spoke specifically about this, and how dangerous this was. They were basically forming a triangle. You could argue it's a descending, or I would say more likely it's, looks more like a symmetrical triangle to me. But we basically have a flagpole followed by a symmetrical triangle or flag on top of the 200 exponential moving average, slightly above our 200 simple moving average. We are getting the hard buy signal. Last time that happened, we were at the top and then dumped massively after that. The time before that, we were basically at the top and continued to dump after that. The time before that, we were at the top and continued to dump after that. And then the time before that, it was a good signal. It was pretty good back here. So I'm not overly ambitious about this right here, but we do have a bunch of green histograms in a row. We are still below the red slope line, but showing some strength coming out of like key areas right here. So there's definitely some potential for a move back to the upside still. And, I realistically think that's what's going to happen. But this is a tough spot to get into because one of two things is going to happen, in my opinion. We're either going to get a test back up to the upside and put in that right shoulder, or continuation, whatever. But regardless, the up move takes us up to like somewhere around like 47 to 50,000, somewhere around in there. But we can't even close above the 8 moving average right now. And we're just hanging around at the 200 moving average. And typically the more times you test a level, whether it's support or resistance, the more likely you are to break it. So maybe we don't even get that other move back to the upside. We just like break down from here. And this was just an extremely bearish attempt at a right shoulder. And then we sell down violently from here. Or we get like that flagpole move and not necessarily like the head and shoulders move. But this still looks like distribution to me. It was clearly distribution through this phase. We were calling it out, the bearish divergence on all kinds of time frames forever. We got the capitulation move. Now I really just want to see how this develops. It doesn't look bad on the daily, and I could easily see a reaction rally and a finally like breakout to the upside here. But when we really look at the big picture, what's going on right here on CME futures chart. We're on the weekly now. The 8 and 21 have crossed to the downside. So while we could still get that retest up here to like 44, 45,000, or even up to like 50,000 and a wick rejection, we have crossed this now to the downside for the first time since March of 2020. And what happened right then, March of 2020? That was literally when I called out a capitulation was about to take place. That was when, you know, the Wu flu hit and we lost, what was it, like 60% of our value in a week? 51% of the value in a week. So could we lose 50% of our value in a week? Yeah. Did we just get the sell by sell bearish signal, the divergence signal at the top of a massively bearish looking pattern, which looks like distribution with a bunch of red histograms underneath the slope line? Everything on the weekly looks absolutely horrendous right now. Looks absolutely horrendous. But is there a good short entry from this point? No, if you're not short, there's not really a good short entry. I think we have shifted now from a buy the dip mentality to a sell the rip mentality. What do I mean by that? All throughout an uptrend, every time it sells off, you buy support and then enter into a long position. When you now shift into a downtrend, once this 8 and 21 cross on a longer time frame specifically, especially the weekly or monthly, that's a sell the rip. And when I say sell the rip, I mean when we get a bullish move to the upside, you want to sell into that. You want to sell out of your position or short, you know, off of that level or whatever, because you're expecting continuation to the downside, and that is essentially just a dead cat bounce. So that's how I'm looking at this. Again, extremely bearish CME on the monthly. Let's look back at the big picture too. We don't have that much to look at, but you know, this was our introduction of CMEs back in 2017, which was the end of the 4-year cycle and capitulation from Bitcoin from 20,000 to 3,000. The entire time we stayed in a downtrend on the 821 the whole way through until this was my entry on Bitcoin at $4,000, which was across the 821 to the upside. You know, I exited back out of my position over 13,000 right here before I had the channel. This was obviously all before I had the channel. But this right here, this move right here, and what I was seeing take place was the reason that I actually like decided to make a channel. And then obviously once we crossed 821 to the downside here, I was extremely bearish. Already was short on Bitcoin. And then we crossed it back to the upside here. I got bullish on Bitcoin again. And then once again, right here was when I saw everything taking place on the macro. And that's when I actually started the channel and was talking about, I think right through here is when I started the channel, when I started making my videos about how, oh no, wait, actually, I think it was, man, when was it? The end of 2019. Yeah, so right through here, oh yeah, Bitcoin was doing nothing basically, but I was expecting essentially the S&P and everything and Dow Jones to capitulate. So this was the dump that I was calling out taking place on the traditional markets when I made this channel. And how did I do it? I saw all the problems happening in the repo markets before anyone knew what repo markets were. There was like 2 people in existence talking about repo markets, and then also semiconductors. So now here we are after a parabolic run to the upside, and we're seeing issues with what 2 things taking place right now? The repo market and potential semiconductors. So, you know, I think that we're very likely to another potential capitulation event. So, and if we look at the monthly picture here, I mean, if this isn't the most bearish monthly candle we've ever seen, this might be the other one. And that was the capitulation from $6,000 down to our low at $3,000. So I think there's a high likelihood we come back down here somewhere in between like 14 and 20K for a retest. 2 monthlies in a row left the bullish control zone, and we're about to get the 821 or the stochastics cross to the downside. The monthly and the weekly look absolutely horrendous. And I know everybody's like, we're not in a bear market yet, even though we sold off 50%. I totally agree that bear markets are different for every asset class, and a sell-off of 50% does not mean you're in a bear market. But when you start losing 821 crosses on the daily and 200 exponential and simple moving averages, and you start getting like a flat slope on them, it's about time to start saying it's a bear market. So now that we've lost 50% of our value and people still can't admit we're in a bear market, or potentially entering one. Bitcoin, we're getting a little bit of a different picture from our spot markets. we are well below the 200 exponential and simple moving averages. The 200 exponential moving average now has a negative slope, meaning it is angled to the downside, which is my number one, that's my final decision on how I decide if we're in a bull or bear market. If we're under the 200 exponential moving average and it has a slope to the downside, we're in a bear market. If we're above the 200 exponential moving average, it has a slope to the upside on that time frame, we're in a bull market. So based on that, in my opinion, we are in a bear market. So, but if we look at this picture right here, this is telling us a slightly different picture, once again, than the CME chart is. Oh, damn, this is so dirty. Okay, what I'm going to do is, this was the pattern that we were calling out before for the potential head and shoulders pattern and what we're expecting to take place. I'm going to delete all this and then I'll just pull it back here in a minute. But what I'm paying attention to right now is, and what I want to really look at, because I think this is the most important thing taking place. Matter of fact, let's do it like this. Let's do a triangle. So ignoring the wicks right here and just going off of the candle body closes on our daily time frame, this is what I'm seeing take place right now. And this is why I said you could argue it's a symmetrical triangle, or you could argue that it's a well, that doesn't look very pretty. You could argue it's a symmetrical triangle, or you could argue that it's a descending triangle. But basically what I'm looking at is, we have a very clear flat support here at the bottom. And we have a, less clear, depending on if you go by wicks, if you look at the 4-hour time frame, or if you look at the daily time frame, we basically have a clear resistance here. And then if you're looking at shorter time frame or you're going by wicks, again, you could draw the support in like this. So you could argue either that we have a green support here and a red resistance that's basically making a symmetrical triangle, or you could argue that we have a blue support right here and a red resistance that's giving us a descending triangle. Either way, it's bearish, because the argument is on a descending triangle, it breaks to the downside 66% of the time, because it's a bearish pattern. On a flag pattern, you could argue whatever you want, but 66% of the time it breaks in the direction of the predominant trend, which again would be down. So there's now two different ways you could basically do our measure move. We can go from the top of the pattern to the bottom of the pattern. So on our descending triangle, the breakdown would give us a target of 28,700 for this initial breakdown move right here. And then the other one is much, much more bearish, which is the measurement of the flagpole leading into the pattern. I don't like this one as much because I prefer to have shorter, smaller, easier to accomplish targets. But if you were going to go that way, I'll put that one in purple, and we can just sort of zoom this out here and take a look. Matter of fact, that would give us basically the length of the flagpole, and obviously it's extrapolated based on percentages because we're in log scale. So essentially going down would give us a target down here of $10,000. So, do I think we get down to $10,000? No, I don't. I think it's more likely that we would bottom out at 20,000 or 14,000 or 12,000, something like that. But is it possible? Is there technicals leading and telling us that there's potential? Yes, 100%. And then finally, if we were looking at a head and shoulders pattern, this one is not going to be valid because the move is just so ridiculously big based on percentages. But if we did get the breakdown of the head and shoulders, it would essentially be, the breakdown from our neckline, depending on where you position that at, would be, down here to $2,000. Is it possible that Bitcoin puts in its first ever lower low on the macro? 100%. It is 100% possible. But based on previous experience, looking at this chart, we have essentially, this was one entire 4-year cycle and then a low. So we have a high and a low. And then this was one entire 4-year cycle. We have a new all-time high and a higher low. And then, presumably this is our next 4-year cycle taking place. We're still inside of right now based on the halving of Bitcoin or halving of Bitcoin. We have a new all-time high and then potentially another higher low. But could you argue that this is our first macro 5-wave structure taking place and we are in fact going to invalidate that? Yes, that's how That's exactly how a 5-wave structure fucks everybody. Well, not everybody. People that are looking at like the wrong things. Because what happens is the way Elliott wave works and our 5-wave structure works is we take our Fibonacci from the bottom. Oops, that was not our Fibonacci. We take our Fibonacci tool from the bottom of our first wave, assuming that was our first wave, to the top of our first wave. And then we have our retracement, which in this case is between the 236 and the 382. So it's a, bullish 236 retracement. And then we take for our second wave, the bottom of our second 4-year halving cycle to the top of our next one. So the first one is the orange one. The second one is, let me make it a more imposing color. So let's take the green one. So the second one is going to be the green one from that $176 up to $20,000. And we have a perfect 382 retracement. So we have a 236 bullish retracement right here, in between 236 and 382. And then we have a bullish 382 retracement right here. And then we get our final 5th wave structure here. And I'm going to put this one from the bottom at 3,000 up to our top at 65,000. And then let's put that one in blue. And then that retracement, if we would take that down to the 382, would give us a retest of our previous all-time high, which is 20,000. But this is where it fucks everybody, because we're at the 236 retracement now. So we could bottom out anywhere between here and 20,000 based on these previous 2 waves. So our wave 1, our wave 2, as a matter of fact, let me draw it in here. And then it gives like a little bit more of like an illustration. So this is our wave 1. That's our wave 2 retracement. That's our wave 3. This is our wave 3 retracement. This is our wave 5. And then we would now have the retracement. But the blue retracement right here is just from the bottom of 4 to the top of 5, like we did for the 2 to 3, like we did for the 0 to 1. Okay? But the problem is when you retrace a 5-wave structure, you retrace from the bottom of the first wave to the top of the 5th wave. So I'm not saying this has to be the absolute top and that's it for us. But if it is, we could retrace very heavily, because a retracement of that entire 5-wave structure here now in red is going to give us a target to the downside much, much lower. Because if you say the 236 is going to bring us down to of just the 5th wave structure is where we're at right now, the 382 is 20,000. If you say just the 236 of the red wave, that's going to take us down to $5,800. And this would also be the first time we ever have a retracement down. Actually, no, that would not be below the previous level. So that still would not invalidate we've never had a 4-year structure that retraced lower than the previous high. That would be the 236 or the previous low. That would be the 236. But if we get down to the 382, which is here, we got down in between the 236 and the 382. On the 3rd wave, we got down exactly to the 382. So now if on the 5th wave, we still have a bullish retracement, but of the entire 5-wave structure now, that would give us a retracement down to the 382 of the 5-wave structure, which the bottom of the 382, the perfect retracement, is $1,257. So that would invalidate basically what Bitcoin has ever done in its previous 5-wave, in its previous having 4-year cycles. But it would validate basically, the overall completion of a 5-wave structure, at which point in time, based on Elliott wave theory, you would look at this as an entire wave 1 followed by a retracement of a 2, and then we can extrapolate this out based on our Fibonacci extension targets. If we assume basically, this is like such a macro view right now, I don't want to get people too excited, but you got to understand that, if Bitcoin gets down here to $1,300, people are going to say, Bitcoin's dead. That's it. It's never done this before. It's going to 0. Bitcoin's garbage. And then that's actually like our best chance to buy is at that 1,300, because then if we look at our 1.618 Fibonacci extension to get our target for the 3, that would take us up here to $902,670. So does that happen? I don't know. Let's look at our last wave 3 to our Fibonacci extension of the wave 5. We got exactly almost up to our 1.618 retracement. And depending actually how you draw this, you could say that we tagged it perfectly actually. Depending on how precise you are with that, we hit the 1.618 Fibonacci extension. And the previous level, and this is how I called the exact top on Bitcoin, at least where we're at now. Maybe it's not the total top, but the previous one, we came down retracement, Fibonacci extension target up here. We made it up to somewhere in between the 1.618 and the 2.618. So we fell short of the 2.618. So it's not unrealistic to argue that we're going to make it on the next Fibonacci extension, at least up to the 1.618. So if we look at this as a macro and we just put in a giant wave one, I'm going to switch this blue now to white. So this is a giant wave one, and we're now going to get a wave two. This is going to be the goriest retracement we've ever had, and we're going to come back down to that like $1,300 level. That actually is extremely bullish because it would flush out all the weekends, and then we get our 1.618 Fibonacci extension right here in purple. Again, I'm going to get rid of this white one here. Oh no, I deleted the wrong one. That would give us our 1.618 for our wave three up here at $900,000 basically, at which point in time you would expect now we can take that same Fibonacci level based on not just making up targets or our bullishness or Bitcoin flipping gold or whatever stupid narrative someone's trying to pitch or whatever. We would have a retracement back down after that 900,000 top down to like 180,000 to somewhere around 72,000, something like that. At which point in time then we would expect a wave 5 extension somewhere around the 2.618 target of the previous wave. Or once again, if we assume, this is a lot of assumptions and there's a lot of years passing by and things that could happen in between then, but essentially our wave 5 completion of our next 5-wave structure would take us up to the 1.618 of the 3 to 4 retracement, which would give us our target of $4,554,000. $4 million. Did I say that right? $4,478,000. $4,478,272. Yep. So you could argue that I'm extremely bearish on Bitcoin, or I hate crypto, or that I'm mean and I hurt people's feelings. But you could also argue that I'm probably the most bullish person in existence on crypto, because if this ends up being a 5-wave structure, like I think it may be, and that we complete and come back down here to $1,000, $1,300, that could literally be the best entry ever for what amounts to, the most exponential move in crypto ever. And I'll tell you what, if we get up to, $1 million Bitcoin, or, $4+ million Bitcoin or whatever, this is probably Citadel, and Bitcoin really is like the world reserve currency, and it won. So again, let's not get overly bullish, because in order for this to work, in order for the prophecy to be fulfilled, we have to first come down to like somewhere in between, what would we say? Somewhere in between like $5,800 and $1,300. So while everybody else, assuming we did ever get down to like $5,800 or $1,300, if we ever did get down there, I guarantee you capitulation would be taking place. Everyone would hate Bitcoin. They'd be arguing that it failed. The world is over. It's done. It'll never go back up again. And then we would be the only person bullish then. Well, I take it back. Me and probably Max Kaiser would be the only people bullish then. But the difference is that I have actual technicals that would make me bullish. Max Kaiser is just a perma bull. So, but that is the ultimate macro with, I believe, the highest target ever projected by any one single person on Bitcoin. So you could say that I am bearish on Bitcoin, or that I smack talk Bitcoin, or that I hate Bitcoin, or that I hurt your feelings. But you could also argue that I am the most bullish person in existence on Bitcoin, and that I have the highest target ever for Bitcoin. So that is a giant macro picture with a ton of presumptions, with a potential and actual explanation based on technicals of what it would look like if Bitcoin is the currency of Mars in the future. So, woo, that was a big one. But hopefully the Bitcoin bulls out there are happy finally for once. Let me jump over to chat here and see what's going on, and we'll keep rushing through some cryptos here, as we're already at like the 1 hour and 49 minute mark. Oh, and no spoilers in the chat either, please, on the Paul Mayweather fight, because I do plan on watching that afterwards. So no spoilers, please, and thank you. All right. Super JDE 11 says, sounds like a plan, man. Oh, I think that was talking about the IRA situation. Pidgey Pot Pie. Pidgey Pot, Pidgey Pot, Pidgey Pot Pie. Says, I'm in. I love your analysis. R Kits, aka K Ritz, says, let's do it. Yeah, Roth. Yeah, and again, that might be right. The 124K. That, I mean, I trust you. Shit, you could probably Google it right now and tell me for sure. Maybe you already did. Nuclear is the solution. Yeah, I totally agree with you guys, man. 100%. Razul. I don't think I've ever seen you in chat before, man. Welcome, brother. Good to have you. Razul Bogdan. I like that name. That's a cool name. Razul. And Gabriel, good to see you, brother. Excellent TA. Thank you, sir. Thank you. Maybe for once, the Bitcoin bulls won't be mad at me. I know I crush their feelings, but I'm right most of the time, too. So they're like mad at me when I say something before it happens. And then after it happens, they're like, holy shit, he was right. But like very, very rarely are the Bitcoin bulls ever happy with me, unfortunately. Because they stop watching me when we're in a bull run because they don't need technical analysis anymore because anyone's a winner in the bull run. But, you know, the truth is you got to always keep your eye on the prize. So, all right. So there's our Bitcoin. I think that's pretty adequate for Bitcoin. We got a pretty epic macro breakdown right there. I should snippet that and make a video. I'd probably gain like 100,000 subscribers from like all the Bitcoin perma bulls. But instead you got to dig deep like hours into my videos and hear me like talk trash about your kids and tell you how ugly they are, but only for now. I feel like my technical analysis is like kids when they're like in their teenage years. They're like all goofy and like ugly and shit just don't look great. And I'm like, yeah, but one day they'll be beautiful. But right now, they ugly. And people just don't like to hear that. They want to always think they got the cutest kids. Ethereum. Nothing has changed with Ethereum, man. It is slightly more bullish looking than Bitcoin on our, pretty much on all time frames. I think we're very likely going to get the 821 cross back to the upside. But in all reality, I think that's just going to end up being a just a bullish retracement of our bearish dump. Like when we came up here, we basically, you know, we didn't even top out at like a key level. Basically in between the 0.5 and the 618. I think more than likely Ethereum gets back up over $3,000, potentially even retest our breakdown level of like $3,581. Again, bunch of green histograms in a row, hard buy, coming off of, you know, what amounts to basically, you know, like bullish divergence. You know, we have a low right here. Actually, it's not quite divergence. It is actually convergence because we have a low and a slightly higher low. But yeah, I think there's a high likelihood that we get back up here for a retest. Maybe we even put in all-time highs. We really got to see how Bitcoin dominance and Bitcoin to Ethereum, you know, chart ends up playing out here. But in all reality, this thing looks good. We basically bounced the 21 moving average perfectly, and we're back above the 8 on the weekly. Unfortunately, we do have the divergence signal, sell by sell, coming out of the bullish control zone, which was, you know, obviously we saw it coming from a mile away. Now we have 4 weeks basically of red histograms in a row, still well above the slope line. So a lot could still happen here. But overall, if we take off our drawing tools and take a look at Ethereum, you know, we are inside of the bearish control zone and we have a downward slope. We're very likely going to bounce that 80 level, as you typically will find some kind of support on there, but we're about to exit the bullish control zone for the first time since, you know, basically like since the end of 2020 and this parabolic run up here. But what I'm looking at on the knife here, we could very likely see, like we have this very clear left shoulder, neckline, head. Inside of the head, we have a very clear left shoulder, neckline, head, left shoulder, neckline, right shoulder breakdown. And this looks like to me the price action on Bitcoin, where we have a head and shoulders that makes the head of the head and shoulders. So we could very easily see the knife basically jump back up here and come back up and give us something like this. And then a breakdown, which would typically, we would see this like with divergence. and then bearish divergence, basically put in a new high on price action, but not even close to putting in a new high on the knife, and then see a breakdown from this level, which would give us essentially the measured move of the head down to the neckline, and then a massive capitulation breakdown from this as we leave the bearish control zone and cross the stochastics on the monthly back down to the downside. Now, again, that's very hypothetical situation, and, this will take months to develop, and we'll see it happening from a mile away. But I'm telling you, there's a reason I'd say this stuff might happen, because I've seen it happen so many times. This is a massive indecision candle after a parabolic run to the upside. And while the monthly still is overall bullish on Ethereum, we still very clearly in an uptrend in the bullish control zone. We could easily just consolidate here sideways and then get continuation. But if we do get continuation and we put in that divergence, it's like more likely than not, we're not going to be able to get a new high on the knife coming out of this area because we've lost momentum. So even if price action continues to the upside, the knife will not be able to get up that high. It'll top out somewhere around that 100 level, and then it's just going to eventually lead to like what I just said happening. So Ethereum looks more bullish on Bitcoin right now on the short, medium, and long term on every time frame it does. But overall is definitely giving us some more warning signs, other than the warning signs here before the capitulation dump over $4,000, which was like literally where I said I was getting out of my Ethereum position. But I'm always entering into little scalps and whatnot along the way, and I always keep some of my positions for long term on some of these assets as well. But this thing is showing us basically how things could look. And if we look at what we did that little argument earlier about Bitcoin and how it looks, let's do that same little argument about Ethereum and how it looks. You could argue here that I'm going to turn off the moving averages real quick again just to kind of clean this up, because man, that shit look ugly. What is this? This is like the bullish version of the Bitcoin pattern. Bitcoin has what you could argue is either a symmetrical triangle or a descending triangle. Ethereum has an ascending triangle or symmetrical triangle. Actually, really, it's more of just an ascending triangle, because depending on how you argue, you could basically say that this is our, triangle right here based on daily candle closes, or you could say that this is our triangle here based on, wicks. But, either way, this is a bullish pattern and breaks to the upside 66% of the time statistically. So if we took from the wick to the top of the pattern, or if we just took like the meat of the pattern, a little more conservative of a target, which is obviously I am a conservative in more ways than one, this would give us basically a target of a move back up in between the 786 and the 886. So if we just assume that we're going to get our target back up, which would be a bullish retracement of our bearish dump, so an internal retracement that does not put in a new all-time high, that would give us our target up here of $3,600. So when and if we do get up here, I would basically be looking at this as a top and another potential to either exit a position that you were stuck in or enter into a short position, assuming that the predominant overall trend is going to be to the downside on crypto. But again, lots going to happen before then, but I think more than likely Ethereum does in fact break to the upside from this position. So, all right, nice little touch on Ethereum. Man, I'm going to make all the crypto people happy today. I know y'all sitting at home with chubbies right now talking about them Bitcoin $5 million targets. Ethereum, it's not dead yet. But I don't want to hear about it if you are. So, Litecoin, you know what? It's Pride Month, so I don't really care, man. be proud of your chubbies. Litecoin, I mean, fundamentally, I think Litecoin is shit. It's on my shit list for the last since 2017, and it's not going to get off my shit list probably ever. But in all reality, it looks weak. It looks very similar to Bitcoin. It's below 200 exponential and simple moving average. It's putting in what amounts to a neutral pattern. Basically just a flagpole, or I'm sorry, a flag after a breakdown. And depending how you target this thing, again, while I have more bullish targets for something like Ethereum, Litecoin is going to be basically, I mean, this thing goes to zero if you try to exponentially like put this target out here. So in all reality, you got to figure, I mean, this thing is underperforming like a mofo. it did end up getting up here to a decent level, but there's so many better assets with so many better targets and so many better like fundamentals and technicals that it's occasionally I'll take a little scalpy scalp on Litecoin, but this thing just looks like trash. Yeah, I just don't see any reason to be on the Litecoin train right now. Polkadot has essentially amounted to just a, sideways channel from our breakout level back here at $18 to our top out level, which it actually slightly underperformed. I was expecting it to get up to $50, and we actually topped out slightly below that. Oh no, we did make it to 50. Okay, I think maybe I said $50 to $52, something like that. We did make it up to 50, so technically hit my target, but this thing, it's an underperformer right now. It's below 200 exponential and simple moving average. It looks slightly more bullish than Bitcoin, slightly less bullish than Ethereum. I still think there's a likelihood that this gets back up to $30, but there is a lot of overhead resistance. And in my opinion, a bounce from this point in time would be, essentially just to get out of a position. Doggy Dogecoin, overall, one of the most bullish charts still in crypto, constantly putting in new all-time highs, about to cross 821 back to the upside. We said it every time this has happened before. New all-time high, basically cross to the downside, save the 821, and then we get a parabolic move after that. The time before that, parabolic move, cross 821 to the downside, at which point in time we broke back to the upside and got a parabolic move after that. So, what do I think is going to happen? I think that if we hang out here long enough and we see any bullishness whatsoever coming out of Bitcoin, I think more likely than not we get a parabolic move to the upside. And, this is what I was talking about the reliability of this signal, depending on what asset you're looking at. Here we got a hard buy signal and sideways, parabolic move to the upside. Here we got a hard buy signal, parabolic move to the upside. Here we got the hard buy signal. You could argue that that's a parabolic move to the upside. I would say 80% counts as parabolic. And then now here we are again, getting the hard buy signal. So we're basically back at the exact area, about to cross 821 back to the upside. So, what do you think's going to happen after this? More likely than not, I would say Dogecoin is probably going to have another, say it in the chat with me, guys, parabolic move to the upside. So, but again, we got to be careful because we do have a left shoulder, neckline, head, neckline, right shoulder, potentially underperforming right shoulder. This thing could very easily sell back off. There's very little support built along the way. So, this one is overall, I would say, still bullish and still has some serious upside potential. But, this is a account record. If this thing starts to sell back off, we have built no support along the way. We've just had parabolic move, sideways consolidation, parabolic move, sideways consolidation, parabolic move. So if we do start breaking down from these key support levels, like from where we're at now, if we break down, our next support is between 5 and 8 cents. So it's a massive capitulation move. And then after that, the next support is, around a penny. So, this is nice and there's definitely still some potential and the chart overall looks nice and everything and is bullish. But, let's just say risk reward and position size management are probably more important on Dogecoin than just about anything else in existence. But I still think that there is more upside potential. There is definitely still more upside potential, but we'll have to see if it comes to fruition. Because from what I heard, Elon Musk has officially broken up with Dogecoin or Bitcoin or something else. Who knows? Diamond hands, Elon. Hopefully, never mind. I'm not even going to waste my time. MicroStrategy. You guys know how I feel about MicroStrategy. It's basically bumping its head right now on the 200 exponential moving average. Been having a tough time getting back above it. It is still above the 200 simple moving average, but overall, we got a high, a low, a lower high, a lower low. So more than likely, what's going to happen next? A lower high. Once again, we are operating inside of a descending channel. So I think more realistically than not, we could get up to as high as, basically this area right here, top of the channel, $600. We're at 500 right now. It's a 20% move to the upside. It's not bad, but we're literally at the heart line right now. So, we're literally at the exact middle of the channel. So in my opinion, the risk reward is just not here right now. We did exit the bearish control zone, got the hard buy signal, basically exactly where we're at now. We got a bunch of green histograms in a row. The histogram is getting ready to cross over the slope line. So you could argue that there's a trade here on MicroStrategy. But I mean, if there was ever going to be an opportunity for MicroStrategy and Bitcoin to like break out and gain more upside like momentum, I would have thought it would be this week. You know, you got Michael Saylor like at this Bitcoin conference, basically like, you know, lining up, just hand jobbing every dude that loves crypto, every dude that loves Bitcoin. So I would think that that would do work for his stock. And this thing hasn't moved. And same with Bitcoin. You know, this should have been, if there was ever going to be a massive like move, if I'm not mistaken, the $14,000 pump not last year, but the last $14,000 pump on Bitcoin when it topped out lined up perfectly with the Bitcoin conference. And that was like Max Kaiser coming out with his funny glasses, talking about how Bitcoin was going to change the world. And he was like just screaming and couldn't even like string together a coherent like sentence. And then after that, Bitcoin went from $14,000 down to $3,800. So this time we didn't even get a pump leading up to the Bitcoin conference. So I don't know if they're just not able to pump it, or if just everybody that's bought Bitcoin has already bought like for this time period. But, you know, if you want to base it on that, you got to be careful, man, because I mean, if none of this was able to pump up Bitcoin, if Michael Saylor and Elon Musk and Max Kaiser and Anthony Pompliano and all the Bitcoin horsemen all rode down to Florida and got together, and 50,000 people had like a love music Bitcoin festival, and they weren't able to get any positive Bitcoin price action to the upside out of it, like, are they all just already all in with leverage? I mean, probably, right? I would have to say yes. That had to be the most bullish fundamental event that you could argue, like this big Bitcoin conference that they've been hyping up forever, and then we saw no positive Bitcoin move out of it. I don't know. So I don't know. Pidgey Pot Pie says, thoughts on quality altcoins if Bitcoin capitulates that badly. If Bitcoin capitulates that badly, I think you will be able to count the altcoins on one hand that do not sell off worse than Bitcoin. I think it will be stuff like Binance Coin, Bitcoin, maybe Ethereum, like they don't sell off worse. I think most everything else would just get absolutely wrecked. Absolutely wrecked. Bubbly says Mike Tyson, Stachaler. I'm assuming that was a Michael Saylor reference. That's funny. Michael Savior. I've heard so many like funny names that people like call him. They're all like so ridiculous. I'm like, go back to 2000 and see what Michael Saylor did to his fanboys. Coinbase talked about this last week, and the potential for a entry, and you know how I was potentially looking at this as opportunity and a trade to the upside, and we immediately had a sell-off before I was even able to take a position. What were we talking about? I can't remember what level we were paying attention to. I want to say it was right here at like $240. I can't remember, but I did enter a position at like $230. So we'll see what happens with Coinbase. But overall, I think there's definitely still some potential to the upside. Maybe not. I guess I could adjust this actual entry to my entry. But in all reality, you know, that's what I'm looking at. We'll have to see how this plays out. Obviously, I was not expecting there to be just like immediate, you know, bearish move right afterwards. But it did make for a better entry point. I still think we could come back down here and double bottom at like 220, hit the heart line and get a bounce. and that would be an even better entry point. But honestly, like I took this position with like a long-term like move in mind. So I don't really look at this as some little scalp move to the top of the channel type deal. I do still think that this will end up being a legitimate trade. And I really think Coinbase has a lot of long-term potential in the crypto space, especially because of like, I think eventually their plan will shift from fees to custody. But again, we'll have to see. And I think there's a high likelihood we do get back up to at least retest that 300 level, at which point in time I'll start looking at that as a potential take profit zone. But we'll have to see for right now. I'm not mad about it. I look at it as getting a better entry. If it goes down to like $200 again or $220 again, of course I would rather get that as an entry, but you know, got to deploy capital somewhere. That's just how I do it. So we'll have to see on that one. But looks decent. Doesn't look as good as what I was hoping for. But we did get the hard buy coming out of the bearish control zone off of our Fibonacci extension with a pretty nice drawdown from the direct listing and a bunch of green histograms in a row on the daily. So I like how it looks overall. We don't really have enough information on any longer time frames to look at anything as of now. What I really want to see happen here, if this is going to, you know, get bullish or continue bullish to the upside, is I want to see this thing start closing above the 8 moving average. It looked a lot better when it was up here closing above the 8 and then immediately like lost the 8. So I would like to see it obviously regain the 8. But we'll have to see. We'll see what happens. If you look at, you know, it's tough because there's so little information on this just because it's so new. But if we look at the 821 on the 4-hour, I would really like to see the 821 cross typically to the upside on the 4-hour before I take a daily position. And then obviously this was looking fairly bearish here. But I like that 230 level or 228 level that we're at right now. But again, I could easily see this thing sell off more to the downside. And realistically, the risk reward on this trade, you know, 8% stop loss to the downside, you know, it's not actually like a hard stop. I'm not planning on selling this position if we break down from it. But, you know, for risk reward purposes, it's important we keep those levels in mind. So Bitcoin dominance. Oh, I meant to look at this one already, but we talked about this a little bit already. And basically what's taking place, I do expect this to end up being like essentially carving out a bottom right here. I really do. I think, you know, based on this is on the weekly chart, you know, this was our previous time. We basically crossed to the upside, had a slight bit of follow through, and then came down and put in a higher low. Here, we had basically a very similar situation happen. We crossed to the upside, had a little follow through, came down, put in a higher low, and then continuation both times. And then here we have obviously, you know, put this in, had a little continuation, breakdown, put in a higher low, continuation, and then here we're getting the same situation. Crosses to the upside. I would expect there to be, you know, a little bit of continuation, pullback, and then continuation. I don't know if it comes back up here and takes out the high or anything like that. But if it does continue to sell off, we spoke about this specifically. If we come down here and take out this low right here and put in an all-time low, like on Bitcoin dominance, I expect altcoins to just, Moon is not even like a legitimate like term. I think Mars. I expect altcoins to Mars if Bitcoin comes down here and takes out that low on Bitcoin dominance. This would, in my opinion, be in like direct line with basically like altcoins just absolutely going parabolic, while Bitcoin either goes sideways, down, or up but slower. But I think more likely than not, we're carving out a bottom here, and that we're actually going to see Bitcoin move back to the upside. And, you know, these moves to the upside are, you know, a couple months long, few months long, and result in basically like a large portion of the overall crypto market cap like draining out of altcoins and back into Bitcoin. So we'll have to see. Still a bunch of red histograms. I typically like to see at least like one green histogram starting to show up. We are starting to exhibit like some signs of bottoming and potential divergence here. But again, we really just have to see how this looks. It's such a long time frame, and there's just so little information that's useful right now after what amounts to a massive capitulation move in Bitcoin dominance. I hate to try to pick the bottom on something like this because we could very easily just dump straight down here to like 35 and altcoins go parabolic, or maybe Bitcoin just capitulates and altcoins barely sell off because like people just don't like Bitcoin anymore. We'll have to see. It's definitely losing some of its luster, but you know, is that just because there's a ton of new altcoins and people just have not experienced like what it's like to be in a bear market in altcoins yet? I would say 100%. I think that there's a lot of pain coming for altcoins. The question is, do we see more upside potential first? And I don't presume to know the future. So let's do tech next, and then we'll do our commodities. This is going to go long. We're at 2 hours now. Yeah, I want to finish this out in 3 hours. So 45 minutes or less, guys, from right now is my target. So I'm going to rip through tech and commodities. So no long-term pictures on these. We're just going to do the short-term. Tesla, you know, Tesla basically, man, did we ever say what I was looking for, a potential entry point on Tesla? I said I didn't want to take a position out of here, but if it sold off back down to literally where we sold off to, I'd be interested. So that was it. The entry was like 75, with the target potentially back up here to like $700. You know, nice risk reward, 6.6% risk with a 20% reward to the upside. Does it happen? I don't know, but it looks pretty good right now. I like it. I like the entry. I like where we're at now. I like this trade. It was definitely, it has potential. And like I said, you know, overall bearish pattern on Tesla. It's a descending triangle very clearly. I do expect another lower high up here at like $700. But in the event that we do end up breaking out of this, that's going to look like a real nice entry. You know, but we could easily just sell back off and capitulate down here and hit some of my longer term targets. But it was nice. Nice little entry. Played out perfectly. It's nice when that happens. Pinterest. Pinterest showing some more weakness again. Obviously bearish engulfing candle. It is still above the 200 simple and exponential moving averages. You know, but it's like middle of the range right now. It could easily just go sideways here, kind of move down. But again, this is a nice little entry. I think with a target of 32% potential to the upside, with a like 10% drawdown, like 3-to-1 risk reward ratio. I think this again is a nice one. I'll be paying attention to this one this week for a potential trade of the week. What did we do last week? I took position on Coinbase, Tesla, Baidu, and Alibaba. So we'll see potentially Pinterest looks juicy for this coming week. I don't think anything else has jumped out at me yet, but we'll have to see. I may have mentioned something and I'm not thinking about it. I'm extremely careful though on tech right now because of the rates, and also most of tech stocks have already had a weekly 821 cross to the downside. It's not uncommon to sell off to the 50-55 after an 821 cross to the downside though, and then just break back above, cross this back to the upside, and then get continuation to all-time highs. So that is definitely a possibility, and we are getting ready to enter like the bearish control zone down here. So we're looking at key levels where we could potentially be bottoming out. 236, the 50-55, but we got to be careful because we could easily see Pinterest back down at like $47 or like long-term $40. But in the meantime, I think there's definitely a scalp on some of these tech stocks starting to show their heads. So I would really like to get a buy down here at like $61 and see this trade play out. So we'll see what happens. But then again, you know, same type of deal again, where I would be looking at this as, you know, a potential take profit, or, well, it would definitely be a take profit, but potentially just another lower high topping pattern. So looking at this one for this week though. PayPal. Okay, so PayPal is another one that could have some serious potential here. You know, we have this descending triangle, typically a bearish pattern. Looks like we have broken out, found support a bunch of times on the breakout. I'm bullish on PayPal overall. You know, I think long term, it's definitely got some serious potential. It is another argument against like the banks. You could very easily see something like PayPal and Square, you know, completely dethrone like the banking industry. Maybe that goes along with FedCoin. Maybe neither one of those happens. But there's definitely some fundamental arguments as well as technical arguments for PayPal. So I could very easily see PayPal up here at like that $340 range if we do get our breakout. Don't mind the fireworks. Obviously, somebody having a good time. If it gets too crazy, I will go close my window. But yeah, overall bearish pattern. Looks like we're breaking out to the upside. But in all reality, until we take out like that $275 level, really can't get like overly bullish on this, as we have like one top, two tops, essentially a third top. So a pushback up to that 618 could very easily be like another topping pattern right here. So we'll have to see. But overall, this looks good. And again, this could be, we're inside the bullish control zone, coming out of the bearish control zone, hard buy signal. Obviously, multiple green histograms in a row. Damn, somebody going to town. Obviously, very clear slope line flip here. This looks good. It looks good. And, very likely could be another entry for this week. Depending on where we potentially get an entry from, I would say probably we could at least put into play something like this, 7% stop loss to the downside, or, risk, not necessarily a hard stop, with 18% to the upside. So like 2.5% risk reward, 2.5 risk reward ratio, or potentially a little bit higher of a target if we get that play, the 1.236, and also the measured move of our bearish pattern breaking out to the upside instead. And then also could line up too with what was our previous channel that we broke down from. That may actually act as resistance again near that 1.236, near that basically measure move target up here. That would give us like 337 target, 28% to the upside, with again like 7% to the downside. So that's like a 4-to-1 risk reward. So let's keep PayPal and also Pinterest in mind for our trades of this week, or positions of this week. eBay did exactly what we're talking about as well. Came back up to the top of the range, got a rejection here. We did get a higher close on the daily than our previous two times, but still got to be careful, because as we have technically confirmed a breakout of this bullish pattern, there's still a very high likelihood we get rejected here, come back down. I would take a position once again off of these lower levels, off of a retest. We might not get it. You could argue that the breakout trade is the next trade here. We're getting a hard buy, but we're very high up on the range, and I typically do not like to take this signal at the top of the range. We did, however, cross back above the slope line, multiple green histograms in a row, and obviously above all of our moving averages. I don't even have to look at those to see. Yeah, this thing looks good. It looks very bullish, much more bullish than most of the charts we've looked at. And more likely than not, we'll probably see continuation. The question is, do we see continuation off of one more retest of like that $60 range, or do we just break out from 65 and get our, basically our measured move of the pattern up here and our second trade setup up to like $78? Probably, I would say $78 is almost inevitable at this point in time. The question is, do we go there from 65? Or do we go there from 60? But I'm not going to just jump into this one. I do not like buying breakouts, nor do I consider this to be a confirmed breakout if I was going to. But overall, very bullish. eBay. Etsy. I'm going to take a quick drink. Etsy. Basically just moving inside of what started off as a descending triangle breakdown, just fell short of our target, and now looks a little bit more like a descending channel to me. I do expect us to break through the heart line at some point in time and get a retest of that breakdown level resistance. It was support flip resistance at like $190. If we get up there and it looks like we're going to break out, it's very high likelihood we come back up here and retest the top of the range. But in all reality, I am much more interested in this if we continue to basically consolidate in this downtrend. I'm much more interested in this down here at like $115. I don't really see a nice risk reward from where we're at right now. We're in the center of the range. So if we break down to the bottom of the channel, it's going to be 50%. If we break up to the top of the channel, it's going to be 50%. The risk reward is just not there right now, in my opinion. And we'll have to see how this plays out, but there's definitely some potential there. Maybe we just get a bullish retracement and we get that 236 retracement from that March low and then break back up, and that was it. And this thing just goes parabolic in a bullish uptrend. But I think more likely than not, we can get an entry closer to the 382 and like a little more of a bearish consolidation. So I'm looking at this down here with the trade setup we put in place at like 110 bucks, 112. So nothing really here, not short term. Zoom is looking good. Basically got a very nice entry off the bottom here. Still in this position, obviously, this trade. Still expecting continuation after our consolidation break of the heartline. I do think it's very likely that we're going to get up here to like that $376 range. I'm still extremely bullish on Zoom long term. I think that they're going to see some serious competition and probably lose market share in the future. But I don't think any of that tells us we're going to have lower prices. I think it's very likely that we hit trade target number 1 for a 38% gain. Or if we do, in fact, get the breakout, which is much less likely, in my opinion, from this level. I think more likely than not, we would come up here, find resistance, sell back off, and then find support back off of the heart line and then get our breakout. But if we do just break out from this level and go parabolic, that would be an 86% move from our position entry back here, and what works out to an 11-to-1 risk-reward ratio. So once again, very nice trade. Still in this. Still expecting at least trade setup 1 to play out, if not trade setup 2. So Zoom, overall bullish, short term and long term, but midterm, yeah, it could go either way. Baidu. So this was our trade from last week for multiple reasons. We have talked about all these reasons a bunch of times. If you didn't watch last week's video, just watch the video from Wednesday, fast forward to Baidu, and you can see why I took this entry. Very nice entry. Actually took it off of support right here. So we ended up getting a slightly better entry than we talked about Wednesday last week. But everything still looks the same to me. Macro, I think this thing looks absolutely beautiful. We're buying a very, very nice support that has performed very well a bunch of times. We're also buying basically off of the macro 0.5 retracement. Yeah, I really like this trade. Bunch of green histograms in a row. Flip the blue slope line over right here. Got the hard buy signal coming out of the bearish control zone. Looks very good on the daily for our entry. Looks slightly less appealing on the weekly. But again, doesn't look bad. We're coming, we're in the bearish control zone. Still not looking great. Slope line is still red. Still all histograms. So maybe we jumped the gun on this one slightly. We could still get a better entry point possibly off of like a retest of like 172. But I like this. I like where we're at now. I like this entry. And honestly, if we do get a further drawdown, even as low as like 150 bucks, I'm still looking at that as a buying opportunity. I don't think we'll get down that low. And if we do, maybe I'll start second guessing this. But overall, it looks nice. I think this is a nice trade. I think it looks good overall. Shorter time frames, and we'll have to see how the weekly develops because obviously the daily has to get bullish before the weekly can, and the daily is only now getting bullish. So and then Alibaba, actually let's turn off the moving averages and zoom out here, and this is same thing. This one looks slightly more bearish or less bullish, as obviously we have that same sort of like support line. This one goes back much, much further, and we have broken down from it. But in all reality, we did that back here. We had a slight break before we really had that in place. Here we have a very clear break around the same amount as we do currently. But this is going back to like 2015 support level. So if we break down from what was support for, 6 years, I would expect much lower drawdown. But we're basically buying off of the 0.5. And, essentially, I think this thing looks good. Overall, still looks fairly bearish on shorter time frames and pattern-wise. But coming out of the bearish control zone, bunch of green histograms in a row. We have the flip of the slope line right here. And then, obviously, if we turn back on the moving averages and we turn off our drawing tools, you'll see that, we have to be very careful because we do have a negative slope on the 200 exponential and simple moving average. We are below the 377 and the 528, only just now flipping the 8 and 21 moving average back to the upside. So, you know, this is sort of like kind of cherry picking because we're kind of picking the bottom on this. But the value is there, I think, long term. And I have a pretty strong case why I'm buying this area, just because that is like the previous top of, you know, what amounts to, it amounts to a bunch of things. On the weekly, it's our 200 exponential and simple moving average coming, you know, out of basically a positive slope, out of the bearish control zone after, you know, a elongated sell-off right here, showing a little bit of strength on the histogram. But also just flipping back over, you know, we have that very clear support line. We also have what amounts to, I think, a macro 1, a 2, a macro 3, and then this is our 4 pullback to our exact buy zone that we had in place since basically way back here. And, you know, honestly, I think this trade setup is really going to play out. I like it for the long term. And again, it's a 92% to the upside with what amounts to like a 16% drawdown at the entry point right now. And then on our second trade setup, 191% move to the upside with the 16%. So we're talking about risk reward of like 5.5 and 11.5 times. So again, while I'm kind of cherry picking, and I always say I don't like to pick bottoms, etc., you know, when the opportunity presents itself and enough things line up, I most certainly will pick bottoms, as I am a value investor, and I think Alibaba and Baidu both are value plays and very nice, even though we're getting some bearish signals still. And, you know, you could argue a bearish case just as easily as a bullish case. I like where we're at, and we'll have to see how this play out. And maybe I will be wrong. Maybe I will enter from a lower price, or maybe I will be right. NIO. You know, you could argue a lot of the things I just said for Alibaba and Baidu for NIO as well. The main difference being we don't have that same support where we're at right now. We sort of have it on the daily based on like the 200 exponential and simple moving average. We're back above the 8 and the 21, potentially going to save that cross and, you know, invalidate this descending triangle coming out of the bearish control zone, multiple green histograms in a row. So again, you could argue on the weekly that this thing is actually more bullish, and I would agree with you. But I'm not seeing the same Fibonacci retracement supports. You know, we would be buying the 236 basically with some slightly, we basically have slightly less technicals based on Fibonacci, but better technicals based on moving averages. But we have like no actual Fibonacci support. I mean, the 236 is obviously an extremely bullish retracement if we get continuation, but more than likely, I think we come down to the 382, the 0.5, or the 618. We also don't have that same 5-wave structure support. So I would have rather seen NIO sell off more heavily. That would make it look more bullish to me right now. But you could argue that, you know, the Chinese government's got their hands in this one, so we're not going to see the same retracement as where, like, with Alibaba, the Chinese government is bending over Alibaba, making them pay like millions and billions and trillions, oh my, as where with Baidu, they basically bailed them out and took a stake in the company. So maybe that's why the chart looks more bullish on NIO and less bullish on Baidu. No, on Alibaba. Damn. You know what I mean? But realistically, I'm not going to pick the bottom on NIO in the same way. Also, NIO has had an absolute parabolic run in a much shorter period of time. In the last year, NIO went from like $1 to $65, and it's still at $42. So there's, you know, value-wise, there's a lot less there for me. So hopefully that gives you an idea on why I think Alibaba and Baidu are much better for picking the bottom. And although NIO is slightly more bullish looking currently, I'm much less likely to take a position in it. Apple is next. I'm going to grab another drink. Apple is looking decent overall. I still think it has some further downside. I don't love how it looks. Um, but we'll have to see. It still looks to me like a descending triangle taking place here. We could very easily come back up here and retest, the top of the range at like $131. But I really want to see it at least take out this high back here at like 136 bucks, and kind of break out of what's amounting to like a giant descending triangle. Because that's what I'm seeing right now. I'm seeing a big descending triangle on a lot of like the tech space. But overall in the NASDAQ, we're seeing like an ascending triangle. And stuff like eBay, we're seeing an ascending triangle. So we're kind of getting mixed signals. And when there's mixed signals, there's an argument to the upside, there's an argument to the downside. But typically the best thing to do is wait and see how it plays out. So Bumble next. This was one of our trades from last week. Bumble obviously had a nice follow through since we took that entry, up quite a bit on that trade. Entry was like 40 bucks. We're at like 46 and some change right now. So what are we up like 15% on that? No, not quite. 10%, 12%, something like that. Still expecting a potential retest up here and that 42% target of the breakdown of our descending triangle. But let's look at the actual candlestick analysis here. While the indicator oscillators are still quite bullish, we're seeing momentum. We're seeing momentum getting ready to flip the slope. We could very easily see a retest back down here to like that 42.50 range. This is a bearish candle and basically a rejection. But again, I would expect it to get rejected and come back down to like $42 or $43. So I'm not up enough to take profit. We have not hit my target yet. But I'm also not necessarily that interested on a retest. I guess if it comes back down to 42 bucks and starts to hammer out a bottom, maybe we see a little divergence on shorter time frames. Maybe I'll enter again and take a larger position back to the upside. But right now I'm comfortable in the position I'm in. Not seeing anything overly bullish right now, nor am I seeing anything that tells me I need to get out with my profits and run. But once again, nice trade. Glad we entered it. Obviously, the best case scenario is you enter a trade and then it immediately goes in your favor, which has pretty much been all of our trades recently. So, ARKK, ARK, all these ARK funds pretty much look the same. Some look slightly better. Most look slightly worse. We're just in this descending channel. I don't see any reason to enter into ARK. We broke down from key support. We are now retesting that same support. We're now retesting, as resistance. We're now retesting a very clear resistance channel. This thing has been underperforming since it overperformed. It overperformed for years. Everybody FOMO'd into it at the top, and now it's underperforming. I expect net outflows. I expect Cathie Wood to just get on, all the time and talk about why she's bullish, and her time horizon is 5 years, which is great, and I totally agree with her, and I think she's going to be right in maybe 2 years, probably 5 years, definitely 10 years. But the truth is, I think that the risk reward is horrible to the upside right now. In my opinion, there's much more potential downside than there is potential upside short term. In the event we consolidate, break out of the channel, and get the measure move, I think it's just going to be back up here to a lower high. But that's still like a 30 to 40% move to the upside. So maybe if we break out, consolidate for a bit, and show some strength here, I will potentially take that trade for what amounts to like a breakout, retest, and then, continuation. But I would just expect it to be another lower high short term. So not really interested in ARK. Definitely not at the top of this range at resistance. AMC, we talked about this last week. I'm not interested in AMC. I'm not interested in GameStop. I trade based on technicals. I'm not a Reddit trader. You could definitely make money as a Reddit trader. They've proved that. I'm not buying into silver squeezes or AMC squeezes or any of those things. Because what happens is they work a bunch of times in a row and then you get absolutely wiped out because you don't understand technicals. You don't understand fundamentals. And you most certainly do not understand position sizing or risk management, etc. This thing went parabolic last week. And so it basically bearishly engulfed and then got bought back up. And now I just think it's going to get more bearish continuation. It doesn't look good to me. I I don't like it. We're about to cross now, leaving the bullish control zone. The Stochs are going to cross the downside. It could still have more upside potential, but there's no... Let me put it this way. There's a million other channels you can go to and trade off of tweets or squeezes or groups. Not interested. GME, GameStop, didn't quite get our measure move of the breakout of what amounts to, once again, a descending triangle. It's a bearish pattern with a bullish breakout to what amounts to essentially that same high, which is basically we got our high back here. We have a lower high. We have the same high again. Could very easily see this thing break to the upside. Could very easily see at least $380 again, if not new all-time highs. But again, there's no trade here in my opinion. There's nothing here for me. Looks like we're about to lose the bullish control zone and get the cross to the downside. We did just now flip the slope over blue, but we're showing some weakness. I'm just not seeing it. In my opinion, GameStop and AMC are bankrupt or going to be bankrupt companies. There's no long-term fundamentals for either one of them. Maybe they can shift their business model and their business and become powerful again. They have the names behind them. They have the capital now because they have both raised capital at ridiculous valuations. But I would bet that we're going to see GameStop below $50 in the very near future, and we're going to see AMC below $10 in the very near future. Do we see higher prices first? I don't know. But again, I'm not interested in them. All right, so let's do our commodities, and then we're going to wrap it up. We've got about 20 minutes left. So doing pretty good on time. Definitely taking longer than, well, I was expecting this to go about 3 hours. Gold is, I still expect it to come up here to 1950. Still expecting what amounts to a triple top. Still expecting it to do exactly what it did on the last macro bull cycle where it topped out at $2,000. Showing a bunch of weakness on the daily. We're in the bullish control zone, about to leave it, getting the hard sell signal, or have left it. Bunch of red histograms in a row, about to lose the blue slope line. Do we still get up here to 1950? I think we do. But the premiums are ridiculous on gold right now at higher levels than I've almost ever seen them before. I like Gold Eagles. I think the premium for the 2021 Gold Eagles is like $300 right now. Typical gold premiums are like 5 to maybe 10% on Eagles. They're just ridiculous. There's a whole movement behind gold and why it's bullish and why it's going to the moon and inflation. And I think while macro, we probably do see inflation, and micro, we are seeing inflation, I think the whole middle is deflationary. So I can't get behind it at these prices. But I guess it's easy to say too, because I also have gold. So if I'm wrong, I still win. But if I'm right, I win more because I get to buy more at a lower price. Silver, massive, what is amounting to at this point in time, an ascending triangle. Obviously a bullish pattern. More than likely going to break to the upside. If we do, targets as high as $36, $50, $90, $120, $500. You guys know I love silver. I'm all about silver. I'm not about the silver squeeze. I do not think that a bunch of dudes on a forum can win against like central banks and big banks and like whales the same way that they can beat GameStop and AMC. They are not going to win in the metals markets. Again, I love silver. I have a ton of silver. I'm massively bullish on silver. You could say that silver is my favorite and one of my most bullish positions long term. But at $28 with $12 premiums on Eagles and $4 premiums across the board, there's nothing here for me. There's nothing here for me. I'm absolutely not going to pay 33% for Silver Eagles premium. I am absolutely not going to pay 15% for, generic silver. There's just no way. There's no way. So currently, and then also if we look at the XAU to XAG chart, I mean, you got to argue that it's bullish for gold, bearish for silver. We have a massive descending triangle, another descending triangle inside that triangle. We got a break of the red resistance with a target up here at 88 to 1 silver to gold ratio. And if we break through the orange triangle, which we're just now doing, and the retest, the target is as high as 84 to 1 silver to gold ratio. And, you know, in all reality, we have very clear Fibonacci targets to the upside, a bunch of resistance above our heads. And if we zoom out and look at like the big picture, this looks exactly like what happened last time, you know, on the macro, where we basically get like an ABC correction that's going to lead us to like much lower silver to gold ratio. So I'm massively bullish on silver in relation to gold in the future, but even a 0.5 retracement takes us up to like 90, and we're currently at like 68 to 1. So, you know, and we have that same signature on the monthly right here. You know, we're down in the bearish control zone. Looks like we're about to get a nice bounce. So we got to see, you know, do we get a little bounce in the meantime and then sell off further? Do we get a massive bounce to new levels and gold goes parabolic and silver dies? I don't know. We got to wait and see, but none of what we're seeing right now in the short term is bullish for silver, in my opinion, in comparison to gold. USAS, this was another trade from last week. You know, I'm not going to go into like depth with this one. This is one of the gold, silver. This is American Gold and Silver Mining Corp. One of the least bullish in the space for like gold or silver miners. Most of them are like at the top of the range, like retesting key levels. This is basically at the bottom of a triangle after a massive sell-off. You know, which you could argue this is going to break to the downside based on technicals and statistical analysis. But I think that more likely than not, we continue to operate inside of this triangle pattern. And if I'm right, you know, we have that trade potential back to the upside of like $3. So it's like a 100% move to the upside. So again, you know, that's our trade setup in place. We're basically still down here at the entry level at like roughly $1.65 with a potential target up here of like $3. So 72% reward with like a 6% risk if we break down from the pattern and invalidate this move. We're seeing on the daily a bunch of green histograms coming out of the bearish control zone, getting the hard buy signal. You know, it's like a 10 to 1 trade, and one of the trades we entered into still looks good to me. It still looks good right up until it doesn't, basically. So XPT, platinum. Okay, this is an interesting one because we spoke about this a bunch of times, basically how we were essentially testing two key levels. So while my target was still to the downside, and I thought more than likely we were going to get an extension of our 4 retracement of the macro 5-wave structure, we did actually lose that support here. We lost the channel support in yellow. We lost the channel support here in blue. Broke down from it. It looks like we're getting a bullish retest or retracement before continuation. So while we did put these potential trade setups in place, again, I don't like the premiums on platinum. They're way higher than I'm willing to pay. And honestly, I don't like the price action on platinum. I think we're going to get a very good opportunity down here at like $1,000. And I think if we do sell off down to $1,000 or even 1,075 or 1,100, I think that the premiums are going to come way down too. So even if the price action doesn't come down that low, I think the premiums are going to come down much more. And, you know, we could potentially have targets of the breakdown of the full channel down here as low as like $850. So there's going to be, in my opinion, a very nice buying opportunity in the near future for platinum. So on to the cannabis pot stocks. Let's go to Tilray next. Tilray, obviously, got a nice entry on Tilray off the 200 simple moving average. Basically got a really nice move after that. Got the hard buy signal, got the multiple green histograms. Now we have the blue slope line in place as well. This still looks extremely good. There is, in my opinion, a ton of value in the cannabis space. We hit our target perfectly to the downside, got absolutely beautiful entry, And I don't have to tell you guys about my trade setups on the pot stocks. In my opinion, Tilray is headed back to $100, $300, and then a new all-time high of $1,000 in the next couple years. Massive potential here. Life-changing / wife-changing money, in my opinion. ACB, Aurora Cannabis. I think we're grinding out a bottom here. We talked about this pattern way back before it ever even developed. Inverted head and shoulders. We're grinding out the right shoulder now. Got a massive move. Bumped our head exactly where I said. Well, slightly front ran the 200 exponential moving average. Coming back down here to retest the 200 simple. I will probably continue adding to this position with a short-term target of the neckline at $19 and a long-term target at much higher than that. This was one of our trade setups and trades of the week a couple weeks ago, the cannabis stocks. 151% to the upside, 18% to the downside, 8-to-1 risk-reward ratio. And then if we do get the breakout of the neckline and our head and shoulders pattern, obviously we have a much higher target with a 20-to-1 risk-reward ratio. Very bullish. YOLO and THCX we'll take a look at next, and then we'll take a look at uranium, copper, lithium, lumber, Caterpillar, and John Deere, and then we're going to call it a wrap. YOLO, this is the pure cannabis ETF. We have a descending wedge. We have a confirmed breakout of the wedge. We found some resistance at a key Fibonacci level. Now we're looking to find support. I still expect this to move up to at least $25. Obviously took an entry on this one. We have the hard buy signal. We have the blue slope line and a bunch of green histograms in a row. I may actually add to this position off of these levels as well. I'm still expecting targets of $25+. But for now, internal retracement on this. But I do expect this to go to new all-time highs in the upcoming commodity bull run. THCX, Spinnaker, Cannabis, another ETF. Again, we have a descending resistance. We broke out of that resistance. I really want to see this get above like $19 and break this previous high, at which point in time it'll be $20, at which point in time the real resistance is $22, and then after that eventually $30. Again, blue slope line, bunch of green histograms. We got the hard buy signal. We're now inside the bullish control zone. So we could see this come back down to like 1650, at which point in time I'll probably add to this position as well. And part of the reason that I don't specifically talk about canopy growth, another obviously pot stock, is because it is already inside of YOLO and THCX. So rather than take an additional position on canopy, I think it has like a 10 to 20% weight in both of these. So I would prefer to buy Tilray and ACB outside of this, and then just buy these two ETFs to increase my position on canopy and diversify my position on the marijuana / CBD sector / hemp / green, etc. UEC, Uranium Energy Corp, already in a position on this from a while ago, up massively in profit on this. Still potentially expecting this to top out somewhere in possibly a new high up here at 391. I don't see any good entry point at the time right now in this, but you could argue that we're basically putting in an ascending triangle and uranium's getting ready to break to the upside. I think there's potential here for some bearish divergence to play out. We'll have to see how it develops, but I really think the uranium trade is going to be really nice in the future, but is way overcrowded right now. And this is like a 30-year, like 10-year, 20-year cycle. And we're like 1 year into a parabolic bull run. So we could easily see like 6 months to a year of downside from where we're at right now, or slightly above. URA, Global Uranium ETF. Again, same type of thing. We're at cycle highs right now. I'm in a position still on this. I do expect further upside, but I am extremely hesitant, especially to enter another position on the breakout right here, as there's potential bearish divergence developing. It's already come so far. And again, we could see this go sideways for like 6 months to a year easily. Copper, same thing. Called the copper top literally perfectly at $30 here. This is the CPER index fund. I mean, I think that there's short term a high likelihood that things like copper and lumber and uranium and potentially gold and silver are topping out short term for what amounts to like long term massive commodity bull runs. And you could say that about all the commodities. Not interested at these valuations. But we'll have to see. Maybe we'll be interested down here at the bottom of the range in this like parabolic uptrend right here. But we have literally hit our target from the breakout at $21 up here at like $30 perfectly. That was the breakout of, basically the W pattern. We're at the top of the range right now. And now here we are coming down to the bottom of this channel that we've been like oscillating inside of for the last like year plus. So do we break right now when we come back down to the bottom? I don't know. Maybe we do, maybe we don't. But again, I just don't see the value here. But you could argue for dollar cost averaging into this. I would much rather wait for a better entry point on copper. But I do love it long term. I think it's copper and silver are probably copper, silver, and uranium are probably my two strongest arguments for like a macro higher prices. Lithium, again, another one that I really like, but not necessarily at these valuations. We'll have to see where this goes. There's definitely some potential for this $75 target, another 10% to the upside. But I really got to see where this goes. Again, I think that the trade most of it has already taken place, and most of these commodities are just a little too crowded for me right now. I don't like to do what the cool kids do. I like to do it before it's cool, and then teach them how it's cool, why it's cool, sell them my bags, and then buy them back at a discounted price later on once they forget why it was cool to begin with and lose their money. Lumber, well, we called the top up here on lumber, sold off violently, then everybody was bearish, then I said we hit the bottom, then moved up, then everybody got bullish, then I called the top again at the 618, then we got bearish. What are we doing? We're just making a descending triangle. I expect further downside potential on lumber. These prices are completely unsustainable. I am one of the people that has some things that they would like to build, some projects they would like to do, but will absolutely not be willing to pay these prices. The same way that we're starting to see now a bunch of like massive home builders, even small home builders go bankrupt because they have basically agreed to contracts before these prices went parabolic, and now there's just no reason to complete like these projects because the prices are so high now that they can't make any money off of them, or their companies are bankrupt because they have a bunch of contracts they can't fulfill. So in all actuality, I think that this lumber trade is, I mean, realistically, all this lumber shortage had to do with tariffs and natural events and, incorrect assumptions. They stopped lumber mills because COVID and there was restrictions and people didn't want to get sick. So then they figured nobody was going to need lumber. So then we went into a lumber shortage because all of a sudden everybody bought all the lumber because they were stuck at home doing projects around the house and building decks and, remodeling and whatnot. Everybody thought the housing market was going to crash, so they thought they weren't going to need lumber. And then the housing market got bailed out and because the Fed bought all the mortgage-backed securities. Therefore, the housing market has gone parabolic. And again, unsustainable levels. People made lumber mills are not supposed to speculate on demand. Lumber suppliers, middlemen, are not supposed to speculate on demand. The same way that silver, mines and middlemen companies on the internet are not supposed to speculate and cause like what amounts to basically bottlenecks in the supply chain, because when they start speculating, they're not speculators. They have a job, they have a business, and they should do what they're good at. And instead, they start speculating, and it ends up usually biting them in the face or blowing up in their face or blowing off their hands or at least their fingers, and ends up as a, hey, in the future, probably don't do this because this is what happens when you do. And this just looks like a giant descending triangle to me, and I expect further downside. And honestly, I think we're going to see a bunch of like legitimate companies that were smart, that were profitable, that decided they were going to become speculators, get absolutely burned and destroyed and go bankrupt because of speculation. The same way that we're going to see, Reddit warriors and random, young people and women and pick whatever X demographic here that bought into the stock market or whatever cryptocurrencies at extreme high valuations get absolutely burned. And again, nothing against young people, nothing against new traders or investors, nothing against women. I think it's absolutely great. But the problem is when you bring a bunch of new people into the top of a cycle, most of the time those people get burned and then refuse to ever invest, refuse to get educated, and they end up out of the markets forever. So what seems like a net positive because you're bringing new people in and getting them interested in investing, speculating, trading, ends up being a net negative because those people get burned and never come back. So that's why I hate these ridiculous bubbles. And, whatever. It is what it is. But it's the cycle. It's the circle of life. Caterpillar, again, very high valuations, all-time highs. Love Caterpillar, but we're putting in some bearish divergence here. Triple, quadruple bearish divergence, you could argue, depending on what points you're looking at exactly. We're at the bottom of what amounts to a massive channel or wedge. We could easily see continuation and hit my target here to the upside, but at some point in time, I think we're going to get the breakdown and lose like 20% to 50% of value. So while I do love Caterpillar and am massively long fundamentally and technically on Caterpillar, I think that there's no legitimate risk reward entry point here for me. And then finally, just about finished, guys. John Deere, same exact thing, but more bearish. You could argue that there's a trade setup here with a 12% move to the upside and 3% risk to the downside, 4-to-1 risk reward. I would argue that, well, I wouldn't even have to argue because I'm the one who put the trade setup on here. So yeah, you could definitely take that trade. I could definitely take that trade. We could definitely take that trade. But the truth is, it's the risk if we do break down from that level is exponentially more than the little 12% that we're able to like scalp off that move, or 20% or whatever. So again, massively bullish in the long run, but I really think the same way I talked about like all the indexes earlier on, I feel the same way about a lot of the industrial sector in general. Same with tech sector. Same with damn near everything. It's hard for me, someone who is a value investor that bought most of these things at pennies to the dollar of what they're at now, to enter positions on the majority of them. But the ones I do find, obviously I tell you guys about. So, just a reminder, if you are just tuning in or new to the channel, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. We are right at the 3-hour mark. We nailed everything. Got our rant out of the way early this time, which is always fun. And I think we are going to go ahead and call it there. I'm going to jump over in chat real quick and see what anyone and everyone had to say. And then I'm going to get out of here. And again, no spoilers, please. Go watch the Mayweather-Paul fight. So, all right. So, oh, what's up, New Pathway? Good to see you, brother. Can't wait for Crypto Trend Trader to be my financial advisor. Yeah, that will literally never happen. But by choice, not because I couldn't help you out. But for sure, man, good to see you in the chat too. Oh, and if you're over there watching right now and you have not said hi yet, maybe you've never said hi, maybe you are just a quiet lurker hanging off in the shadows, now's your chance. Let me know where you hail from, where you're at right now, what your favorite asset is, what trade you took of mine that has worked out for you amazingly right now. Anything, I don't care. Put a middle finger emoji or a pot leaf or whatever you want. But here's your chance. I'm asking for you specifically to holler at me in the chat right now. Make it a first. And, if you always talk to me or whatever in the chat too, feel free to do any of those things as well. I always like to see new names, new faces, whatever. Helps me to get to know you guys. A lot of the reason why I have this channel and I do this is not only to help the community, but also to, make kind of social what is otherwise a non-social event. trading can be lonely. Fortunately, I am lucky that I have a lot of friends that I have helped to make quite a bit of money investing and trading. Therefore, they have decided to be interested in the things that I'm interested in. So that has helped me in my real life. But again, I spend a lot of time in front of my computers, in front of these screens, making videos on the internet. So it's always nice to interact and hear from the community. Also, if you have not heard already, or maybe I have just mentioned it and you didn't catch the details, I am planning on reopening our private group. It is a paid group. It is paid monthly, and it will. I'm going to be taking names or whatever from people that are interested to start the group back up. Basically, like 3 weeks from now. So next month at the beginning of the month. So if you are interested, go over to the crypto trend trader page, and you can find my email. Or if you were in the group before I got the CVD and had to close it previously, just email me again and just let me know that you are interested. And obviously, I will put you on the list. But I will be opening the group back up. You've got like 3 weeks to decide, or save your money, or see if I know what I'm talking about if you're new. But highly recommend that you consider investing in yourself, investing in your future, and I suspect that it will pay off for you exponentially in the long run by either saving you money, making you money, or you'll just have one more friend than you had before in me, and a bunch of other cool friends as well, as I'm extremely strict about only cool kids in the group. So if you're not a cool kid and you want to pretend to be a cool kid, if you pretend long enough, you too can hang out with the cool kids. So, well, there you have it. Appreciate you guys. Good to see you. Thank you all. Appreciate the compliments and all the positivity, man. Definitely looking forward to the fight, our kits. And with that, guys, I am not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. This is not financial advice. Crypto trend trader, and I'm out of here. Oh, and I will see you guys on Wednesday for our midweek market update. And I'll keep you guys posted on how these trades are looking, and if I am going to, or if I do, or when I do enter into these positions. Obviously, do not want you to take the same positions as me, but let's be real. You are all independent, strong men or women, and you're going to do whatever the hell you want. So keep it up. Crypto trend trader.